I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
To me, it kind of feels like the cyclicals may be outperforming today. Tech, the defensives, underperforming.
Yeah, that could be something we're watching for. We saw a real underperformance yesterday from the basic resources sector, and there again is another area of reversal today. So the basic resource sector from the worst performing yesterday to, lo and behold, the best performer today, up by 0.7%. In terms of those stocks on the move, Critty, you've been through some of those for us already on the tech sector. AstraZeneca, then, a stock we talked about quite a lot yesterday, and that stock up by 1.9%. Rio Tinto, part of that rebound that we see in the basic resource space. So a few interesting movers there in terms of the individual stocks. In terms of the companies that are reported, ABN AMRO, I can see, is down by 1.7%. We were speaking to the business earlier on. They seem to beat along the top line a lot, but there was that kind of caution around returning cash to shareholders, and I wonder if that's weighing on expectations.
It feels like it might have a read-through across the banking sector. I want to quickly point out that UBS is, of course, under pressure as well. And just in the last 24 hours, you did have a Reuters report coming out that the U.S. is probing Russian accounts that U.S. had taken over from Credit Suisse. I'm curious how much of that is affecting the volatility that we're seeing. Those shares down about 1.2% in the opening trade. We're going to keep an eye on the DAX as well as we start to continue to get those trades. But in the meantime, I feel like the big picture story is bullish or bearish on U.S. equities. We spoke to Louise Dudley, Global Equities Portfolio Manager at Federated Hermes. Take a listen to what she had to say.
The US for next year and beyond is actually looking very strong, and even within Europe, we're looking at companies that have that US exposure. The growth is just that much better.
Let's bring in Freddie Late, Managing Partner, Latitude Investment Management, joining us around the table this morning. Freddie, we keep having this debate. Guy and I are up in arms about it, whether the stock market always goes up or not. What is this reaction to the Trump trade? Is this an extension of maybe the outperformance, the economic resilience we already saw, or is there something different?
Morning. I think, it is extraordinary how it does just keep going up. So that's a fact at the moment. I was just saying before the set, it surprised me how much it moved higher, given it had rallied so far into the numbers. And so I was a bit shocked by that. The difficult thing here is this does drive growth. There is a chance for more productivity, more deregulation, more M&A, more activity, more domestic production. So there are reasons to be more incrementally bullish on the US economy as a result of the election. But a lot of that was already in the price, and this is really what the big question comes down to, and why I think we're seeing the volatility between sectors and rotations going on, because actually the economy is very strong, but so is the market. It's already anticipated that in a large way.
When it comes to anticipating that, though, what kind of correction, what kind of downside are we looking at here? Is this maybe something when the inevitable pullback comes, which we know is a function of stock market rallies, are we looking at mini corrections, 5–10%, or something a little scarier?
I think it really depends what causes it. And I know that's a get-out-of-jail-free answer. But
Come on, Freddie.
if it's inflation, I think it could be quite meaningful. If inflation is driving a real reset in capital allocation and people pulling back and a drying up of liquidity across the board, then you won't have that support to buy back into the sort of the dips, if you like. Obviously, the same thing applies if it's a meaningful recession, but that does feel reasonably unlikely at the moment. You know, the underlying economy is pretty strong. The third reason why it could be weaker, and I do think it comes down to this liquidity point, is if other areas of the world start looking genuinely rosier. And so if liquidity leaves the US market at the same time as we're seeing a correction and says, well, actually the UK or Japan or emerging markets or any other region are really interesting, we're going to deploy our liquidity and capital elsewhere, that would stop the dip buyers being ever present.
It doesn't feel like the rest of the world looks rosier, though, at the moment, does it?
No, not at all. So it doesn't feel like inflation's coming back. It doesn't feel like the rest of the world is rosy. It does feel like the US economy is getting a little bit better. In fact, it's quite strong. Inflation's contained. Employment's high. Yeah. And so you can see why US exceptionalism continues as a trade.
Let's talk about where you putting money in the bond market.
Yep.
Long-dated inflation-linked bonds.
Yep.
10%. Is that presumably that's an inflation trade?
It's an inflation trade.
Short-dated yields 12%, short-dated bonds 27%.
Yeah.
Is that just a cash-like story, or is that a belief that rates are coming down?
That's principally a cash-like story. So the way we've been looking at the government bond markets, and we think about European, UK, US, inflation-linked or not, long duration or not. And we have predominantly been short-dated, call it cash, for the last couple of years. And we've been pouring our way into a little bit of the longer-dated inflation-linked bonds in the US, where I see the inflation risk as the highest. Not today. Today is it's at 2 and a bit, and break-evens are at 2 and a bit, 2.3, I think. But the risk is really there that it could pick back up again. And I would look at the Trump win and think that became more likely. But because interest rates have risen, the duration effect has swamped that. So the bonds are losing money at the moment, even the inflation-linked bonds.
Why is that normal for you? Short-dated gilts, short-dated bonds, 27%, 12% and 27%. That cash-like story. Is that cash-like story there to take advantage of something, or because actually short-dated yields are, let's call it circa 5%, and that just is decent ballast into a portfolio that's risk-free?
Yeah, it's not been that normal over the last sort of 10 years, but in the last couple of years it's been very normal, yeah. And I think you've got an inverted yield curve, so you get paid more to take less risk in many ways. And it's optionality on something happening, as you say. I don't know which way we could go, deflation, reflation, lack of liquidity, but the chance for increased volatility in both the bond and equity markets feels so high that the optionality of owning cash versus duration seems very good to me.
So we're talking here about whether your asset allocation across different asset classes is Trump-proof, I suppose, and whether the inflation risk is there and whether you're protected. What about in your equity holdings then, Freddie? I noticed quite a lot of bank stocks represented here, some other financials. Is this part of a Trump trade? Is that where you see the positivity?
So we did have our third best day ever after the Trump's election, but it wasn't because we positioned for it per se. I've owned a major overweight in the US banks for the last 8.5 years. So that's been in the portfolio. We've sized it up and down. We did add a small amount into the election, but it's not positioning around macro events. It's not really how we do things. We're trying to look at the world and say, where's the value? Where's the world going to be in the next 2 to 3 years' time? And try to position for that, not around the shorter term. So it's working very well. I do believe we'll continue to see the rotation, out of some of the big cap tech names, not necessarily meaning they have to crash, but just meaning there are so many other things that might be more interesting for investors.
But Freddie, I'm interested in your view on this, whether or not it is something that you get involved with. I think it's fascinating to think about cryptocurrencies and where they go under a Trump administration. So tell us how you're thinking about this, because the extent of investor or institutional adoption of Bitcoin as we go into another Trump administration, with the change in regulations he might bring, the bringing onshore data, crypto mining and all sorts, is this something you give thought to, or you let others do this?
So we haven't invested in crypto or the crypto ecosystem. Obviously, I look at it and follow it a fair bit, but there's far more in the world that we don't do than we do,
yes.
if you like. So, I don't do small caps, I don't do private equity, I don't do private credit. So we follow it, and it's interesting, and it fascinates me on weekends for reading, but it doesn't impact many of my stocks. To a degree, it impacts some of the banking shares. They could either be beneficiaries or losers from it. It impacts some of our utility shares because that, along with AI, drives massive demand for electricity in the US if it does get reshored. So there's some sort of gentle benefits in the portfolio.
So it doesn't drive any kind of fundamental rethink of crypto and its worth and its prospects because we end up with another Trump presidency?
Well,
it might do for others.
It might do for others, and I can certainly see how the day before to the day after, you've got to say it's worth more, given his positivity towards it, and he's talking it up, and the involvement of Elon Musk in the sort of, in the government in its own form. So it had to be worth more to some degree. Valuing it's obviously famously challenging, but valuing gold is challenging too, and I've invested in gold. So it's not, I'm not sort of completely anti it. It's just, we need a little bit longer to get used to it.
So we keep talking about the Trump trade, but what about the Biden unwind? The massive kind of over-indexing to chip stocks, for example, as a form of defense. What happens to that bid?
I think it gets rotated into other assets. I think, these stocks are great, but they were generally pretty expensive coming into it. And stocks like JP Morgan, which was up 12% on the day, is trading quite expensive compared to its history, but it's on sort of 12, 13 times earnings, which isn't 30, 40 times earnings. And it still grows at 15% as well. Is cyclical, of course, but it's incredibly robust. Fortress balance sheet, Jamie Dimon would tell you. And there's plenty of other things in retail, in healthcare, in utilities that we think are on 15, 16, 18 times, growing that sort of rate, often much more defensive as well, which can be a benefit. I just think the rotation can carry on for a number of years. It'll come in fits and starts, but I really think this is just the start.
You got Ryanair in the portfolio?
Recently, yeah.
Why did you make that decision? The stock's been rising for a little bit off its recent lows. The company screwed up its relationship with its travel agents. It's had a problem with Boeing. There's been pricing kind of issues, how much capacity there is on in the European market. Why is now the right time to get back in?
Yeah, so the three of those things are quite connected. Yeah, we've never invested before. We've been looking at it for about 5 years, contemplating investing, and the stock went up and down basically sideways. The shortage of the plane deliveries from Boeing is only a good thing. Buying the supply cut in airlines tends to be a good thing because fewer planes means higher prices, higher profits. The issues with OTAs, online travel agents, has been solved. They've all come back to them now. And it was that switch from turning them off to bringing them back on better terms that led to the pricing lack of transparency, which led to the issues. So now that that's fixed, we're entering a higher price environment if we maintain a strong economy in particular in Europe.
How important is that?
It's pretty important.
It's a macro play.
In the short term, it's very much a macro play, like investing in a bank.
Yeah.
But over the next 5 to 10 years, I just think it's a structural play. It and Delta are pretty much the only two developed market airlines that make any money. It's going to continue to take market share. It has a potential to yield up on its passenger numbers. It's kept fares flat in nominal terms for 15 years. Pretty amazing. 42 euros.
Yeah, it's the way they run the business is different to everybody else in terms of the way they yield and pricing. Freddie, nice to see you.
Very good to see you too.
Indeed. Freddie Lake, Managing Partner at Latitude Investment Management. Thank you very much. Let's take a quick look at the Core 6, see what's happening at the centre of gravity here in Europe this morning. This is what the picture looks like, and as you can see, it's a fairly mixed one. LVMH rebounding from yesterday. As Freddie said earlier on, we're basically seeing in some ways a reversal of what the trade was yesterday. Novo's a little soft this morning, but not by much. Nestle's a little soft this morning, but not by much. Europe kind of feels like it's drifting a little bit sideways, but there is action elsewhere. And Joe Easton brings it to us.
Huge jump in Just Eat Takeaway this morning, which is traded in both London and Amsterdam. Now, the company offloading its Grubhub business. They announced that deal just a few moments ago following a report last night. Now, as Anna mentioned earlier, it's a massive discount to what they paid for the business just around 3 years ago. They're selling it for around 650 million euros versus a $7 billion price that they announced back in 2021. But the company has been hit by a fee cap over in New York, limiting the amount of money they are allowed to charge for deliveries, and also competition from Uber Eats as well. So analysts and investors really keen for the company to get out of that one. As I say, up 20%, a big move for that stock. Then in renewables today, we've got a couple of stories. Siemens Energy, didn't expect it to be up as much as that. That's a big jump for that one as well. Now, the company announcing strength in its electric grid business. Weakness still in the wind energy part in Gamesa. That has been the problem for the stock. But that is the best performing stock on the entire stock 600 this year, up a couple of 100% in terms of the year-to-date gain for that one. Then RWE announcing a share buyback. This follows pressure from Elliott, the US activist investor, just last week said that the company should be doing a buyback when he announced a stake in the company from the investment manager over in the US. So both those stocks rallying this morning. Smiths Group, meanwhile, wasn't so much on the radar. This is a UK-listed engineer, does detection and also oil and gas supplies for the UK company. That one rallying following much better than expected organic growth for the company today. Then over in banking, the big news out of Spain was this in-depth probe on the takeover of Banco Sabadell by BBVA. Now, that seemed a little bit procedural when we first looked at that report, but according to analysts over at BI, this means the takeover could potentially be delayed according to their analysis. Remember, BBVA did have that hit from the US election, given their exposure to Mexico and concern around a potential trade war there. So that stock and also BBVA in focus today as well. Then in terms of ratings changes, Jefferies becoming more negative on chemicals given the cyclical outlook downturn there. So K&S is an underperform, and Kepler Chevron has a big note on European software today, downgrading a bunch of stocks, including Bechtel, a €5 billion company over in Germany. That one is declining as well as Kepler gives it a sell today.
Thanks, Joe. Joe Easton with an update on some of those individual movers this morning. And there are plenty of them, it would seem. Not a hugely busy day for earnings, but quite a few substantial movers on the block this morning. Let's just tell you that we are getting some live pictures coming to us from the NATO headquarters. NATO Secretary General Mark Rutte and US Secretary of State Anthony Blinken are delivering remarks in Brussels. We're monitoring these live pictures. No headlines coming through just yet, but we know that they are set to talk about Ukraine, of course, ahead of Trump's presidency. When we come back, we'll continue our conversations about some of the stocks that are substantially on the move this morning. Siemens Energy boosts its midterm targets on growing demand for its grid technologies. More on that next. This is Bloomberg.
Our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
We have a backlog now of $123 billion. To your question on our midterm targets, this helps fuel the future. We're very confident not only with how much we have in our backlog and what we're serving with our customers, but also the margin quality. We're very pleased in terms of our targets for this year. We've either met or exceeded in all areas, and this really makes the basis or fuels the basis, if you will, for the future.
Siemens Energy CFO Maria Ferrero speaking there to Bloomberg Television a little earlier on this morning. A little bit of context. This is a stock that started the year in January at 12. It's now trading this morning at 46. It's up by 20% this morning. We'll talk about Bitcoin in a moment, but this kind of feels like it's almost Bitcoin in its rally that we are seeing. It's raising its midterm targets, strong demand for grid technologies. Bloomberg's Will Mathis joins us now for more. I was trying to check out the short interest as well, which has been picking up a little bit recently, but this is a stock that's had an incredible run so far this year and a big spike higher today as well. This isn't about wind, though. This isn't about a recovery in wind, and it's not a Trump trade. This is about grid technology and gas.
Yeah, if anything, this is about the company making people forget about the wind business, which is still losing money. Yeah. But the other parts of the business that have always been strong are doing so well that it doesn't really matter that the wind business is losing money and will continue to do in the next fiscal year. But the other businesses are strong and put the company in a really good position.
So tell us more about the opportunities in grid technology then. I mean, you can't move for stories about data centers in the United States right now. And maybe, I don't know what the Trump administration means for that. Maybe it supercharges some of it. What expectations do we have there? Well, because on the other side of the agenda, on the wind agenda, that could be negative for a business like Siemens Energy.
Yeah, I mean, in Europe, in the U.S., there's a huge need to update the electric grid. And there's it's difficult to win in the wind technology, even in solar technology, but in grids, it's relatively simple. These companies have been doing it for a long time. And all of a sudden, everyone wants to go from just maintaining the grid a little bit to growing exponentially. And companies like Siemens Energy are very well placed to do that, and they don't have a lot of competition. There's not a lot of other players out there. GE Vernova in the U.S. is another one, similar, one of their only peers, really, and they've also done tremendously this year. So you see this as a trend in the energy sector, that companies like this that know how to build grids can deliver on time and at scale that governments need are really profiting right now.
Well, Will, a big chunk of the demand for renewables is coming from tech players, from data centers, et cetera, et cetera. Is there a trade-off? You kind of hinted at this, between powering some of that demand via wind as opposed to solar, especially with the new administration. What does that trade-off look like?
Yeah, and I mean, the other part of Siemens' business that's doing really well right now is the gas business. And, you know, these tech companies don't just need clean power. They want clean power, but they need reliable power. They need power all the time. And when the wind isn't blowing and the sun isn't shining, increasingly, both in the U.S. and Europe, gas is what's filling in that gap. So even as you have a transition to renewables, you're also having a boost to gas, and Siemens is there to benefit from that.
Certainly something we're going to be keeping a very, very close eye on. I know the President of the United States certainly is talking about electricity prices, for example, going off the charts. Bloomberg's Will Mathis talking to us a little bit about renewables and, of course, the massive move we're seeing in Siemens Energy this morning. And speaking of massive moves, let's talk about an asset that may be taking a little bit of a breather. Bitcoin cooling after a post-Trump rally drove the cryptocurrency to just under $90,000. For more, let's bring in Bloomberg Senior Editor for Digital Finance, Anna Herrera, joins us around the table. So we know the Trump trade is a big chunk of this. Has it gone too far?
We'll have to see how fast the government, the new government, the incoming government, acts on crypto. I think the industry expects them to move really fast, but you'd have to think they have other more pressing matters. And obviously, we've seen the rally. Probably it's because of the big contrast with what we've had with regulators so far. They've been really I guess we could say, aggressive towards crypto, especially in the wake of all those collapses. And so just the idea of perhaps having a new administration is making everyone very excited.
What is the case for this, though? Is it, as you say, maybe less regulation, more ETFs? Is it that the US is suddenly going to be adding to its own stock of Bitcoin? What is the core of the case surrounding higher Bitcoin?
I think for a long time, the industry has expected institutions to come in, and now with current regulators, perhaps banks and bigger players were a bit worried to come in. Now, if you have friendlier regulators, then it makes it easier for traditional financial players to come in earnest. So we've had BlackRock, we have had big players with ETFs, but you haven't seen dealers come in. So if you expect a world in which, you know, the SEC is more friendly, then you can see the banks or any other major players come in, and then there will be more demand for assets like Bitcoin.
What does a strategic Bitcoin stockpile mean and look like for the United States? Because that seems to be one of the things that people are getting, well, trying to read the tea leaves on, whether the Trump administration will try to build one up.
I don't know, maybe we'd have to ask El Salvador, because they had a stockpile. I guess it's just, I mean, any case for more buying of Bitcoin, because obviously it's finite, then you'd think there's more demand, and so the price would go up.
And linking back to our last conversation about grids, there's also talk that Trump wants to bring onshore some of the mining activity. Is that a likely prospect?
It depends. I mean, there has been some mining in the U.S. compared to other countries, because the electricity could be, I guess, cheaper. But obviously, it depends on where it goes. They're just excited about everything in general. So, you know, I don't know if it's better to be not excited and then be happy rather than the other way around. But
boundless excitement from the world of crypto. Wonderful. Thank you very much. Bloomberg Senior Editor for Digital Finance, Anna Herrera, on set with us this morning, trying to make sense of this big rally we have seen, and then a slight cooling on the Bitcoin share price as it got to those lofty levels. Now, let's talk about another area of excitement in markets. Will we see more IPOs? Klarna has taken its first step towards a US IPO. The Swedish payment platform has confidentially submitted a draft registration statement to the SEC, the Securities and Exchange Commission. The number of shares to be offered and the price range have not yet been determined, and all eyes will no doubt be on the valuation that this business manages to get to. Implied by a recent asset sale, according to Deutsche Bank, this business is worth about $14.6 billion US dollars. Bloomberg reporting it could be $20 billion US dollars. Well, that's what it will. Sorry, our colleagues reporting that that's what it could have been aiming for. I'm interested in the regulatory landscape. You know, is there a Trump play involved in this? Do they feel that the regulatory regime will be lighter on a buy now, pay later business under Trump?
And we haven't seen an economic cycle. Are we about to see an economic cycle? When does that cycle kick in, and how does that affect this entire sector, buy now, pay later? Also, you do wonder kind of what is happening here with the European listings. Here's another one, potentially going to the United States. Swedish company, off they go, better valuations, etc.
Yeah, it speaks as well to the idea of what these valuations even come in at. Because this Klarna is still very much seen as a little bit of a startup. It's not necessarily as much of an established company as some of its other peers. And I believe Northvolt was a great example where the startup momentum was very large and then just completely fell off a cliff. Yeah, I think that'll happen with Klarna, but who knows?
Yeah, your point, Guy, really interesting, because if everything wants to be a tech company, and if tech companies get better valuations in the United States, you know, where does that leave Europe? When we come back, we will have an interesting conversation about another part of the market that we don't talk about very often. Issuance of collateralized loan obligations have skyrocketed this year. Will that continue? This is Bloomberg.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends. And I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, The China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, The China Show. Weekdays around the world right here on Bloomberg. Context changes everything.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
This is the opening trade. We're about 30 minutes into today's session, seeing a little bit of a mixed picture, a little bit of a retracement when it comes to the losses that we saw in the futures picture. Green on the screen for most of the indexes, but not by a massive margin. Seeing a little bit of pressure still in the Euro Stoxx 50 down. We'll call it 1/10% being generous, but we'll call it flat just to be safe. Just Eat Takeaway seems to be one of the exceptions, though. Those shares soaring to the tune of over 20% after the food delivery company sells its Grubhub unit to Wonder Group for $650 million. Let's bring in Bloomberg's Charlotte Hugh Morgan to walk us through the deal.
Thank you, Chrissy. Yes, so this is big news today for Just Eat. This is a deal that its shareholders have been going after for years. I mean, it first announced in 2022 that it was trying to sell Grubhub, but it has been quite a challenge for it. So that explains the kind of huge share price jump we saw at the open. A bit more on the details. So, as you mentioned, it's $650 million to Wonder Group, which is the startup led by former Walmart exec Mark Law. Now, just on the context here, that's a huge discount to the $7.3 billion price tag that Grubhub commanded back in 2021. You know, peak of the pandemic, you had these food delivery companies, share prices absolutely soaring, you know, people ordering so much takeaway. But I think, you know, that valuation drop is a real indicator of how food delivery companies like Grubhub have, you know, struggled to maintain that momentum.
And so tell us more about why shares then, Charlotte, have reacted as strongly as they have. Because if there was... I read this story this morning and thought, oh, will people be disappointed at the fact that it's worth so much less than it used to be? But clearly that's not the story.
Totally. I mean, I think it's just the market breathing a sigh of relief that the deal's finally kind of gone through. You know, as I said, this has been really in the works for a long time. And you had, you know, Just Eat CEO saying this will improve cash generation for the company. It means that Just Eat can kind of brush itself off and move forward with the kind of rest of its strategy.
Removing the overhang seems to be going down well. Thank you very much indeed, Charlotte Hughes Morgan, on what is happening with Grubhub. Let's turn from deliveries to treasuries. Not entirely sure how you make that pivot smoothly. The former Treasury Secretary Larry Summers has warned that Donald Trump's campaign promises, including tax cuts and tariffs, will trigger more inflation.
Cumulatively, this is a more inflationary policy by far than what President Biden talked about and did in 2021. So if implemented, it will violate the Hippocratic Oath of first do no harm and will be damaging to our national economy, and I suspect very damaging to a president who authors and supports such policies.
Let's talk more about what we're seeing in the markets. Details from Valerie Teitel. Over to you, Val.
Good morning, Guy. We have seen a resurgence in break-even inflation, which is the market expectation of inflation. The two-year break-even has risen nearly 100 basis points since the lows seen in September. We do get the CPI print later today. A lot of eyes on that core CPI number. Month on month is expected to stay around 0.3%, and there is upside risk to that reading to 0.4%. Some Wall Street economists out there noting this morning. A lot of eyes on this core CPI number and what it could possibly mean for the path of Fed rates to come. We have now just less than 25 basis points of a Fed cut priced in cumulatively over the next two meetings, meaning we could see a Fed on pause either in January or December. Not only will Trump maybe, or will Powell maybe get some heat from President-elect Donald Trump, but also bodes the question that we can maybe see rates higher for longer in 2025.
Okay, Valerie, thank you very much. Bloomberg's Valerie Teitel with lots to set up the next, lots of inputs for our next conversation. We're going to talk about collateralized loan obligations now. Laura Cody joins us, Global Head of CLOs and Head of International Securitized Markets Group at Jefferies. Very nice to have you with us, Laura. So let's pick up where Valerie was taking us, which was we are expecting rate cuts. We're not expecting as many rate cuts as we were before we got wind of another Trump administration, and perhaps there are concerns around inflation out there. So what does all of that mean for issuance of CLOs? Talk to us about that link.
Sure. Well, look, let's take a quick step back in terms of what we've seen over the course of the year and in turn in recent months, because I suppose, to your point, like we've really seen quite a bumper year on the CLO side. I think in total 52 billion, and it's set to eclipse the issuance that we saw in 2021 due to the fact that we're seeing more CLO liquidations. On the loan side, it's also been an incredible year and has actually been, in terms of issuance, it has surpassed really the last 2 years. But in recent months, what we've seen more of versus kind of the refinancings and maturity extensions we've seen on the loan side, we've actually seen more M&A, and that's been incredible. Like I think October was the biggest month we've seen since October 2021, and that's been around 6 billion. Same picture in the US prior to that. So I think, look, in terms of kind of Europe, now that we have a kind of a view on the rate, on where rates are going, actually it bodes well for M&A going forward. Like as long as we kind of see like growth, some form of growth in Europe, rates coming down obviously is quite positive.
Okay.
And then, you know, look, talking about kind of, you know, Trump and a new regime, look, in a way the market's looking at it and the picture is unclear with respect to fiscal policy, with respect to kind of tariffs, with respect to inflation. That said, with kind of like changes in, you know, with overall changes in leadership, expectation is actually M&A to continue and to grow.
So
the growth story is big.
Seat for issuance in Europe, M&A.
Absolutely,
we've heard from various voices over the last 24 hours being very bullish on the prospects for M&A. Does that extend to Europe, and that's what drives CLO issuance?
I think that's right. I mean, if you think about M&A in total over the last year, it's probably been about 30% of overall issuance. We really need to see that get back to its kind of normal average of about 50%, and that really means the picture for next year is going to be incredible for CLOs in that respect. Like if you think about it, how big is the CLO market? It's actually about 1.25 trillion, and of that 1.25 trillion, that's housing about 70% of the leverage loan market. So expectations is into 2025 that we continue to see that demand on the CLO side.
Should I think about loans as an inflation hedge?
Yes, I mean, it's interesting that you say that because actually if you've seen the reaction in the US more recently over the last few days, what have we seen? The ETFs, the Invesco ETF, which is the BKLN, actually brought in 340 million in one day, right? What does that say? That people are looking ahead and saying, actually, you know, high yield floaters is the place to be. And it bodes very, very well, actually, for kind of any sort of Trump leadership. Expectations are very positive tailwinds for CLOs and leverage loans, for sure.
If I think about where money's going to go, though, a lot of people are looking, a lot of US firms are looking at the CLO market in Europe and are starting to kind of try to position for that. Does the Trump presidency disincentivize them to continue with that process and focus more on the United States? Or do you think that process continues?
I think the process continues. I think actually, look, if you look at the investor base for CLOs, it's actually very global. So you have to think about the impact. What's the impact effectively? What's the impact on kind of lower rates in Europe, lower inflation? You know, that has an impact on the exchange rate. So you'll have people move from kind of US into Europe. We're always tracking where the value is, really, right? And so the big players from the US, from the treasuries, from bank treasuries, from insurance companies, pension funds, they're always looking across from the US into Europe. So I think we see continued. I mean, and the picture has been quite good in Europe if you think about it. Like default rates have been lower. It's always been a low growth story in Europe. As interest rates come down, that's an interesting place for investors to actually invest. So our expectation is, we look to the US. We always look to the US and kind of what's going on. Yep. And going back to kind of thematically what we're seeing in the US, actually going back to the ETFs, one of the biggest kind of growth areas in the US has been kind of these AAA ETFs that we've seen. If you look at the Janus ETF, it's now, I think it's kind of, even in more recent days, entirely ETFs is around 18 billion. We're seeing that in the MES side. And then in Europe, we've seen in September, we saw the first launch ETF as well. So, thematically, we're seeing people move into Europe with similar ways of investing and taking views.
Is there a regulatory overhang in the CLO space right now, or we're waiting decisions coming out of ESMA, among many others, not to mention the effect on private equity, for example? When it comes to CLOs as a financing mechanism, is that an issue?
Look, I think in Europe you've always got more regulations. When you look at kind of in particular to the kind of the ETF on the ETF side, where the US has really been the front runner for kind of building that. Europe on the regulatory side has been a little bit more muted in that respect. So it's kind of, as I said, it's not the first time that people have had to try to grow that. Look, generally, European regulation, transparency rules, being more open with docs, having kind of dual-rated structures, etc. There's typically more regulation in Europe. But that said, look, it's a great investment place for investors as we walk through, as we go into an environment where it's less clear, less clear in terms of direction. CLOs offer investors the ability to access like a diversified pool of obligors across multiple jurisdictions, across multiple industries, and that allows in a kind of a more because the fact that it's actually a managed product means that a good portfolio manager can access and maneuver through different market environments.
All right, Laura Cody, Global Head of CLOs and Head of International Securitized Markets Group over at Jefferies, joining us around the table to talk about that CLO market, talk a little bit about those financing conditions there and the regulatory overhang that may or may not exist over it. Speaking of regulatory overhangs, let's talk a little bit about one of the biggest deals in Europe right now, and that is the BBVA and Sabadell deal. In the last 24 hours, we heard from the CNMC this idea that the antitrust authority in Spain is saying, we need a little bit more time to review the competition around this. This is crucial. It was initially a 10 billion euro deal. This could mean months of debate about whether or not this is actually anti-competitive. Sabadell arguing this would take, of course, one of the major players is some of the kind of competitive pricing off the table. BBVA saying this actually doesn't do that simply because a good chunk of their profits, their growth, is coming out of not Spain, but Mexico. And there's a Trump trade in that.
Right, yeah, that's really interesting, that angle on the Trump trade. I mean, it's interesting that we're talking here about a domestic deal, aren't we, Guy? And we can't seem to get to the end of those, let alone the cross-border ones that, of course, in Germany and Italy are much talked about right now.
The argument against this is concentration risk. Maybe that speaks against the idea that you want to do domestic deals. You actually want to do cross-border deals.
Ones, yeah.
In some ways, that sounds more logical if there is a concentration risk concern around this deal getting done. But if Europe is struggling to get domestic deals done with a single regulator, it does make you wonder about these cross-border deals.
Well, I think BBVA is also very interesting outside of the Sabadell deal as well, because they're doing active investment in London, but also in Germany, which is a very overbanked kind of part of Europe anyway. So the fact that they actually think they can make gains in these other European markets is pretty fascinating. Of course, they're focusing on Sabadell, but there is that Germany outlook as well.
We'll talk about Germany next and do it in more detail. We're going to speak to the author Katja Hoyer on Germany's crumbling coalition and Olaf Scholz's snap election plans. More on that next. This is Bloomberg.
we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Welcome back to the opening trade. 46 minutes into Wednesday's session. European equity markets pretty flat this morning, down 0.1% on the Stoxx 600. The FTSE 100 is up 0.1%. So is the CAC and the DAX, actually. So very modest gains across Europe. Waiting for that CPI data a little bit later on. Waiting for more Trump appointments probably to come through in terms of market psychology. Let's talk about some of the politics playing out in Europe, though. The German election campaign kicks into high gear today with Chancellor Olaf Scholz making his case for another term in a key speech later on today. Let's bring in Bloomberg's Oliver Crook, who can remind us of what we're looking out for. So, Oliver, we've seen, Scholz himself calling this election. The timing has moved forward a little bit. We're waiting really to hear from the other players. But meanwhile, Scholz makes the case for re-election.
Yeah, that's right. We're going to hear from a lot of the players in Germany after this speech that we hear from Olaf Scholz at about 1 p.m. local time in front of the Bundestag, where he will speak for 30 minutes. That will then be followed by a 2-hour, very fiery debate on the sort of political disagreements that exist within Germany and really start to sketch out the sort of different positions, which we already have a sort of idea on politically going into this election. Really, Scholz is also an opportunity for him to use it as a platform to reiterate sort of what he says Germany needs, which is much more sort of stimulus and support for the economy, and done through basically debt financing, which is, of course, the debt break, the kind of reason that the government collapsed. But he also wants to do it in a more equitable way. He's very resistant to cutting back the social welfare state, very resistant to cutting back sort of pension reforms, coming in fairly stark contrast to what we're hearing from Friedrich Merz, the leader of the opposition, the CDU, a figure that is even more sort of conservative than Angela Merkel in those 15 years that she has as chancellor, and really going through the laundry list of things that he wants to do. The number one thing he says that he wants to sort of bring through, if he were to become chancellor, is massive tax reform within Germany. This is going to be very welcome to the sort of corporate tax front side. He also wants to cut benefits, cut pensions, cut some of the sort of unemployment benefits, that sort of thing. He also wants to cut back regulation and bureaucracy, which we've heard from probably every single German politician in the last many years. Whether or not that will actually happen is a separate question. But where he wants to win some votes from particularly the far right and the far left is a much stricter line on immigration, but also he wants to also augment defense spending from 50 billion a year to 80 billion a year, going directly to sort of building out the sort of German military apparatus, but also being much less restrictive on arms deliveries to Ukraine and basically much more permissive to Zelensky in terms of being able to strike within Russia.
Ollie, thank you very much indeed. Perfect setup. Let's talk about what happens next in Germany and the snap election that is coming our way. Katja Hoyer, Bloomberg opinion columnist and author of Beyond the Wall, East Germany, 49 to 1990. You got the book on the screen. I have to say, I've got it in my hand. The typeface, everything in this book just kind of feels like the 1970s and kind of that era. So absolutely spot on in the way that the book looks and feels, Katja. Thank you very much indeed for joining us. Look, let's talk a little bit about what comes next. How important is this election? Germany feels like it's on the floor right now. Is this election about turning it around, and can it deliver on that promise?
I think it is very much about turning it around. I think that's why the parties fell out in the first place that are currently in the coalition. They really disagreed on the fundamental way out of the economic crisis that Germany is currently in, with the Free Liberals arguing very much for kind of lower taxes, very pro-business policies, and the left-leaning Greens and the SPD in it arguing for kind of more welfare, more social stability, more investment. So there's two very completely different ways really out of the current economic slump that Germany is experiencing. So what the parties will all try and do, I think, for this upcoming snap election is come up with hopefully some fresh ideas, some distinct ideas that mark them out as political parties. Yeah. And really they need to make the electorate a new offer.
Is Germany are you talking about a sort of economic crisis? Is this an economic crisis or a broader identity crisis? Germany feels like it just doesn't have a sense of direction at the moment, almost doesn't know what it's meant to be. previously, and you hark back to previous eras, the Deutschmark gave it a sense of identity. It imposed discipline on German business. You look at what is happening with immigration in the country, and that seems to be undermining maybe the case that many people feel about German identity. Is this beyond economics? Is this about something bigger, about what Germany actually is?
Well, I've, you know, as a historian, I've very strongly argued that Germany's had this identity crisis pretty much since it became a country in 1871. Mainly, I mean, one of the big issues that we see with the war in Ukraine as well is that Germany still, I think, to this day, isn't entirely decided as a nation whether it is indeed a fully sort of Western country in the way that, say, France or Britain or the US are, or whether it looks east just as much. I mean, you know, you could go back to Otto von Bismarck, the first German chancellor, but also as recently as Angela Merkel, arguing that there should be swing politics, as she called it, looking both east and west. And I think that's one of the fundamental issues behind people's disagreements over the war in Ukraine, you know, with the sort of more east-looking people arguing that this is due to Western aggression, and people who are the traditional Atlanticists saying, no, we need to support Ukraine because this is really supporting the West against Russian aggression. So I think these fundamental issues are there, as are kind of issues around what sort of economy Germany wants to be. So after the war, you had the social market economy model basically as the main driving principle in West Germany, but globalization, deregulation, and so on have sort of questioned this over the last few decades. And I think, again, there's a fundamental difference there between the economic models that people want to build up, you know, on the left and the right of the political spectrum.
Talk to us a little bit about some of those policies, though. I mean, this coalition really came part over a debate, among many other issues, around the debt brake and whether or not Germany should change some of their approach to that. Katja, what are the implications of that removal?
I mean, the debt brake is really at the heart of all of these kind of bigger issues that I was just talking about. So the idea that Germany is basically a fiscally responsible country, that's why the debt brake. So the idea that Germany can't borrow a lot of money on top of kind of normal expenditure is part of the actual constitution of Germany now. So most of the political parties across the spectrum have agreed to that and are basically okay with that. Whilst most other countries, I think, would look at that and think this is very much a sort of political and economic straitjacket because Germany then can't spontaneously respond to things. So say Friedrich Merz, as we've just heard, wants to increase military spending significantly. Without loosening the debt brake, this will have to come out of somewhere else, out of other kind of areas of policy making. So probably out of welfare spending or out of sort of subsidies into the industry. And you basically end up making political decisions for economic reasons that will cut back somewhere else rather than borrow and invest, from sort of outside sources. So those are all big fundamental issues about the kind of model that Germany wants to take forward.
So, Katja, you don't see then the debt brake as up for debate here? I know that it is constitutionally set, but some have talked about whether there might be ways to get around that. Do you see that as important to the conversation, or are there ways that Germany turns itself around even with the debt brake in place?
I mean, it can turn itself around with that in place. We've seen this with the special military budget that was put in place after the invasion of Ukraine. So basically, you can declare something a special budget and argue the case that this should be exempted from the debt brake. But it has to be quite a strong argument in the direction, that this is an emergency, something that needs to be sorted out immediately. It's also a fact that the parties who are currently most popular, particularly the CDU, the Conservative Party, they don't want to loosen it. And so basically, I don't think that is going to happen going forward because you would need quite a broad political base really to change the constitution in that direction, which I don't see, going forward, that there's that much unity in Parliament. So I don't see that changing. But what might change is that they argue on particular issues that there should be exemptions, and then maybe you can get a parliamentary majority for that rather than fundamentally loosening the debt brake.
All right. Katja Hoyer, Bloomberg opinion columnist and author of Beyond the Wall of East Germany, 1949 to 1990, joining us this morning to walk us through some of those implications around the German election set, I believe, on the federal front for February 23rd. Let's talk about what else is going to come up in the next 24 hours. Of course, all eyes this morning on the U.S. CPI print. The estimate is about a 2.6% year over year. I should remind everyone that the prior was 2.4%. So if we get that survey number, that inflation tick up that we've been warned about actually manifests.
Yeah, there's some sticker shock value there, I suppose, although, I mean, it is widely expected. It's on the Waco screen on the Bloomberg terminal, so it shouldn't come with much of a surprise attached to it. But we are expecting that uptick in inflation. And, guys, we were talking to Rachel earlier on in the programme. Yes, it's very much about the here and now, and the focus of markets is really around Trump and how inflationary he might be in his second term. But she says because this pushes in the same direction as that, it sort of links in with that broader, more medium-term narrative.
What's really interesting here is the gasoline prices have come down. Energy prices have come down pretty sharply in the US. So in many ways, you would argue that the traditional drivers of inflation are not there. This is service-side inflation. And it's going to be interesting to see how the administration, can it offset higher inflation over here with lower inflation over here? And is that how the energy policy is going to be set up in the States?
Yeah, it is, yes, exactly that. Is it going to be the offset to the tariffs? Yeah, that will be an interesting one to watch, no doubt. A lot more detail, a lot we don't know about the way that incoming President Trump will want to implement his desired policies. Coming up later today, don't miss our interview with the Minneapolis Fed President, Neil Kashkari. That's at 1:30 p.m. UK time. European stocks then flat to positive this morning. US futures flat to negative. That is it for the opening trade. The pulse is next. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
It's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative. If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street.
I think everyone, of the 8 billion people of Earth, I think everyone's going to want their optimist buddy. And there's going to be maybe two. And then they'll be producing products and services. I predict, actually, provided we address risks of digital superintelligence, 80% probability of good outcome. Look on the bright side. The cup is 80% full. The cost of products and services will decline dramatically, and basically anyone will be able to have any products and services they want. It will be an age of abundance, the likes of which people have almost no one has envisioned. It'll be something special. So, now one of the things we wanted to show tonight was that Optimus is not a canned video. It's not walled off. The Optimus robots will walk among you. Please be nice to the Optimus robots. So you'll be able to walk right up to them, and they'll serve drinks at the bar. And you'll directly, I mean, that's just, it's a wild experience just to have humanoid robots, and they're there, you're just in front of you. So, yeah, with that, let's party.
Not one yet. So S&P, you can see down 0.1% in terms of future, and then look at yen, 155. The other thing that we've been obsessed with is Bitcoin, 87,352. Now, to talk more about the markets ahead of our chat about, of course, what kind of cabinet Donald Trump is putting in place, so let's get straight to Mark Anderson, co-head of global asset allocation at UBS Global Wealth Management. Mark, thank you for joining us. What a day to speak to you. I mean, you're in the corridors and everyone's saying, like, how much do we worry about Donald Trump? Do we worry enough, or do we not worry enough about him? Do you think a Trump presidency really changes the game for central banks?
I think it is very important not to get too overexcited about political events. I think one thing I've learned through the 20 years of investing is that you really have to look at the fundamental factors of the global economy. And it's still one where, particularly the US is growing at a really strong pace, inflation is coming down, central banks are cutting interest rates. That's really fundamental of what we're thinking about. Then on Donald Trump on itself, right, it's a bit of a tug of war these days. So first we had a bit of a honeymoon, lower taxes, less regulation to drive markets more positively. We've been overweight US equities coming into the election. And now the tariff is obviously the talk of town, where we're thinking about how negative could this be for economic growth? Is it a bit of a stagflationary impulse where growth will be becoming marginally low, inflation becoming higher? And I think that's some of the uncertainty the market is currently grappling with. Yeah.
So, Mark, if we leave tariffs to one side, is there a danger that actually we haven't really fought inflation hard enough? Again, there are a couple of Fed officials in saying a lot has been done, but we could see it resurgence quite quickly.
So first of all, I think what Powell was telling us last Thursday was certainly that they believe that inflation has been coming down on a path that they're very, very comfortable with. But when we start to think about what the election might mean for inflation, I think there are some worrisome signs. If we pick them sort of apart, you can say, first of all, the immigration is something which is going to be net negative in terms of wages, where you can say there's probably been one of the most positive drivers of U.S. economic growth and the labor market over the last year has been that sort of a higher supply of labor has both meant that the labor market could cool and growth could be relatively strong. So less immigration is likely to reverse some of that. Tariffs, all else equal, is obviously going to push prices higher. So I think inflation expectation is something that we need to worry about. And as an asset allocator, where high inflation is probably the biggest risk for multi-asset portfolios, it's something that we take deeply serious when we construct our portfolios.
So what does that mean in terms of where are you constructive? And is it, if this is a new concern, there's also a lot of concern about bond issuance and the fact that it's going up around the world, so that changes the premium.
So I think the way to construct a portfolio is obviously you have some longer-term inflation hedges, which could include equities, a degree of commodities. Oil prices we think are likely to move higher. We think it's underpricing geopolitical risk at the moment. Gold is something we have in our portfolio. It's been reacting a little bit negative after Trump got elected, but we've seen sort of a very strong rally in gold, both from central banks diversifying out of US dollar treasuries, exactly for reasons around debt concerns, inflation concerns, into alternative sort of areas of safe haven. So I think that's some of the things that we think about in our multi-asset portfolios.
How much more, Mark, do you think equities can rise from here?
We have 6,600 on the S&P for end of next year. So we think there's still a good upside. We have high single-digit earnings growth in the US. We think the tech sector can do well. Financials is a sector that looks particularly interesting these days, maybe a little bit shielded from some of these tariffs, was trading relatively cheap at a 12 times price to earnings on a global basis, and higher rates is something that helps on net interest margin. So financials is another sector, an example of something that could be doing well. Energy, yet another one.
I mean, in terms of how you deploy capital, is it also region by region? And if you look at China, I mean, there is an assumption that actually, trade tensions escalate, that the world gets more fragmented, especially between the U.S. and China. What does that mean for decoupling, and what does it mean for the prospects of the Chinese economy?
So we've obviously seen deglobalization as a theme starting already back in the first Trump term, and something that is likely to continue. So global trade as a share of global GDP, definitely on the move down. If we see tariffs on China in this area of around 50 to 60%, which is sort of the current discussions, it's definitely going to be negative for China. We'd expect to see dollar CNY moving further upwards. It's a difficult time for China, where of course they're trying to stem against some of these negatives with a lot of stimulus at the moment. But higher tariffs is likely to lead Chinese growth lower. We think maybe taking 1-2 percentage points of GDP if we get the tariffs that are being talked about. So quite a bit of a negative outlook for China. Again, trying to be outweighed. Good that the government is thinking about what they can do against this, but a difficult situation for China.
Mark, when you look at the major central banks across the world, who has it most difficult?
Oh, it might actually be in China, because in a way you want to stimulate as much as you can. On the other hand side, you're trying not to push on a string. So exactly what's the right balance? I think that's difficult. The US maybe as well. So Powell, when we heard him on Thursday, he's basically saying they're not taking the policies of a new administration into account before they actually have something more concrete on the table. They're just looking at what's happening right now. But obviously they must be thinking behind the cabinets what's exactly going to happen to growth, inflation. How should they sort of measure the policy responses to that?
What about, the European Central Bank? Again, there's question marks on whether they go by 50 basis points in terms of interest rate cut or 25 in December. They also have Ukraine on the doorstep with all the complications that brings.
I think we're more likely to get 25 basis points of cuts, and I think something that we probably shouldn't be underestimating. Certainly there's been a lot more ECB cuts being priced in over the last couple of months, but we've also seen that when the Fed started on the 50 basis points cut, I think the ECB was very tempted to move a little bit quicker along its sort of big brother peer to some extent. And I think now with the Fed coming down on a 25 basis points pace, maybe even with some pauses in between, I think the ECB is going to calibrate that a little bit towards the Fed also.
Mark, thank you so much for joining us. Mark Anderson, there, co-head of Global Asset Allocation at UBS Global Wealth Management. Now, President-elect Donald Trump has named billionaire Elon Musk and entrepreneur Vivek Ramaswamy to lead a new Department of Government Efficiency. Now, for more on Trump's latest cabinet appointments, let's bring in Bloomberg's Bill Ferries. Bill, so what do we know? How much of these were unexpected? How much of them are just loyalists? And how much do we still need to find out about?
Well, I think to answer one of those questions, they're all very much loyalists. But we are still learning a lot about some of these proposals and these new cabinet chiefs and people like, and what exactly Elon Musk and Vivek Ramaswamy will do. President-elect Trump said that they're going to head this Department of Government Efficiency. There is no such department in the U.S. right now. I think what this will probably turn out to be is some kind of a presidential commission that looks at federal government spending and tries to make recommendations about job cuts, moving departments to different parts of the country, and programs that should be eliminated. But any kind of commission or agency like that will still have to provide recommendations to Congress, which ultimately will make the decision on what to fund and what not to fund. So President-elect Trump said that those two leaders, Musk and Ramaswamy, should complete their work by July 4th, 2026. He said that would be a birthday present to the United States on its 250th anniversary. I think the other big surprise in what Trump has announced over the last several hours is his pick for Defense Secretary, Pete Hegseth. He is a Fox News contributor, personality. He is also an Army veteran who served in Iraq and Afghanistan, but he doesn't really have a lot of experience managing large organizations or even large groups of soldiers. The Pentagon, with its $840 billion budget, is one of the largest bureaucracies on earth. I think there's going to be a lot of questions about whether he has the right kind of experience to run an organization like that. But there's little doubt that he is also very much a Trump loyalist and has the kind of pedigree that I think the president is looking for.
Bill, thank you so much for the terrific roundup. Bill Ferry's there on the Trump cabinet. Coming up, we'll be speaking to Germany's top climate envoy. That's live in Azerbaijan at the COP29 conference. Plus, we'll also get the latest on Olaf Scholz's bid for another term in power. All of that is coming up next, and this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
On the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Well, the German election campaign will be kicked into high gear today with the Chancellor, Olaf Scholz, making his case for another term in a key speech. Now let's bring in Bloomberg's Oliver Crick in Berlin. So, Ollie, good morning. What are we likely to hear from Scholz today?
Yeah, Francine, we're going to hear from him at about 1 p.m. Local time here in Germany. He will speak before the Bundestag for about 30 minutes. That will then be followed, Francine, by a 2-hour debate, which is really expected to be very, very fiery and really speaks to the level of sort of heightened tension within the politics of Germany right now, and of course the sort of great economic trials that it is dealing with right now, which was really the solution to those economic problems is really the reason the government collapsed. So he'll have an opportunity to have that platform to make his pitch once again, to say, listen, we have unfinished work with this government, and this is the right government to lead it forward. He's going to be talking about the economic recovery. He will probably talk about the debt break and having to reform it in order to spend the kinds of money you need to bring this economy back to life, but also to do so in an equitable fashion. This is what's very important to Olaf Scholz. He does not want to cut back pensions. He does not want to cut back social benefits, but there is a sense here in Germany that people have really had it a little bit with Olaf Scholz and the coalition, so it's going to be a tough audience he's speaking in front of, to say nothing of the fact that there's the other elephant in the room staring on the horizon, and that is the incoming presidency of Donald Trump, and it's no secret that these two men don't necessarily get along particularly well.
Ollie, thank you so much, Ollie Crook there in Berlin. Now, those domestic concerns also mean that the Chancellor, Olaf Scholz, is not attending the COP29 summit in Baku. But Germany is still an important voice in the global climate talks. Our very own Jumana Barseche is in Baku for us with a guest. Hi, Jumana.
Fran. So good to see you. Thank you so much. And yes, Germany, very much an important voice in all of the discussions that we've been having here at COP. Really happy to say that I've got with me now the German State Secretary and Special Envoy for International Climate Action, Jennifer Morgan. Wonderful to have you with us.
Great to be with you.
People have been calling this the finance COP because there is a focus on upping that goal that was set back in 2009 vis-a-vis the aid that goes from rich countries to developing countries. Can I just ask how much more money the EU are willing to contribute to that pot, given the domestic developments and given also some of the budget constraints that many EU countries are facing at the moment?
Well, I think the first thing is that we are here for a range of reasons to, of course, increase ambition, accelerate the energy transformation, but we're also here to develop a new approach to climate finance. We are here to negotiate a goal, a collective goal for the next 10 years, and also to be looking at what are the signals that we need to be sending from this process into others around reform of financial institutions, around debt, so that we can vastly increase the investment in developing countries. That's a mixture. That's we need to increase the scale of private finance that is going in to countries. Of course, Europe stands by its commitment to take the lead, and we all have agreed that 100 billion is the floor, and we're ready to do more, but we need others to chip in who are able to do so, other countries.
When you talk about others chipping in, are you speaking specifically about, say, the likes of China, who so far have not contributed? Some people say that they've been sort of hiding behind this mask of being a developing country for too long, but at the end of the day, they are the world's second largest economy.
I think if you look at the numbers, if you look at GDP numbers, if you look at historical emissions numbers, you can see that, for example, a group of countries like Saudi Arabia, UAE, and Qatar, well, the amount that their profit, their GDP has gone up is quite extraordinary. If you look at China, their GDP is about the same as the EU. Their historical emissions are now higher than the European Union. So these are examples of very successful countries that we think now, if they want to be on the global stage being global leaders, then with that comes responsibility.
Yeah. What does the return of President Trump to the White House mean for climate ambitions and for all of the discussions that are taking place here about financing?
Well, I think, first of all, European leaders, EU leaders last week made it clear that being the first climate neutral continent is core to our competitiveness. It is our economic strategy, and we are seeing European emissions going down. We're seeing GDP going up 68% since 1990, growth of GDP 37% reduction in emissions. So you're seeing how you can both be growing your economy and decarbonizing at the same time. We think our investments in renewables efficiency are unstoppable. This transformation is unstoppable. Here in Baku, I feel a tremendous determination of all countries who are here to keep moving. Paris is a very resilient agreement, and the marketplace is speaking.
Yeah. Let me just ask about German domestic developments as well. Germany has 8 energy climate bills that are still pending in Parliament, and those are acts that would increase investment in renewables, hydrogen, geothermal energy, the whole lot. With new elections on the horizon, we know that they're going to happen in February. How likely is it that these bills will actually get passed into law?
Well, I think I can comment on what this government has been doing while we've been in office. I mean, we now have about 61% renewable energy in our grid already. We're on the way to 80% renewables by 2030. This is very important for energy security, to bring down the costs of electricity, and to have a very stable grid, one of the most stable grids in the world. Our energy efficiency rates are also going in a good direction. So in a way, this is the pathway. We have a phase out of coal, which the last government agreed by 2038. We're trying to get that earlier. These are massive investments that have been put into the German energy system. Companies are looking, of course, to remain competitive globally. but this train has left the station, so it's quite important to keep on track.
The reason I ask is because so many incumbents around the world have lost their seats, and a lot of the topics that came up that resonated with the public were to do with economics. In Europe, there's a lot of focus also on immigration, on security, on defense. Do you get the sense that climate objectives are moving lower down in terms of importance and what actually resonates with voters?
I mean, two thoughts on that. I think one is what we're seeing is that in many polls that climate action is still important to voters, but they're very concerned about economics. They're very concerned about the price at the grocery store, the cost of their electricity. And so I think it's important that we have a conversation around that because unfortunately, for example, in Europe, seeing the increased costs of goods at the supermarket, that is all due to inflation, but it's also due to climate impacts. You look at the rise of those prices from the supermarket. If you look at the costs of electricity, renewables have actually helped bring down the costs of electricity since the Russian war of aggression when the costs prices went quite high up. So I think we're seeing in Europe how we can be working together. We need to be doing it all at once. The costs of inaction on climate are dramatic. They are just dramatic. And so if you understand that and then you see, okay, here is a cost-effective solution of how we can move forward that creates jobs, that's where we need to go.
Yeah, and that's the messaging that needs to be translated. Jennifer, it was so great to have you with us. Thank you so much. That was Jennifer Morgan, the German State Secretary and Special Envoy for International Climate Action. Francine, I will toss it back to you.
Joanna, thank you. Joanna Marsecha at the COP meeting in Azerbaijan. Now, coming up, we talk security. Our interview with the former NATO Secretary General Jens Stoltenberg on how the alliance should approach a Trump presidency. That's next, and this is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching The Close.
Welcome to Balance of Power.
This is Bloomberg. Earnings season is here.
This earnings season tells us there is more to life than mega caps.
Bloomberg is first to break the numbers.
Let's talk about Deutsche Bank here.
BASF with that big exposure.
We have numbers from Barclays, from Hermes, Anglo-American.
We've got a lot of earnings to work our way through.
With the smartest insights.
I think the BBVA has posted really a very strong set of results today with that bottom line.
Somewhat cautious on Q3, but I think it's in a better place than it was.
Continuing coverage on Bloomberg.
There has to be some kind of political negotiated solution, but we know what happens around the negotiating table is so closely linked to the strength on the battlefield. So if you want a negotiated solution to the war where Ukraine prevails as a democratic state in Europe, then we need to provide military support to Ukraine.
Well, that was the former NATO Secretary General Jens Stoltenberg. Now, coming up, a Chinese consumer slowdown has weighed on luxury earnings this quarter. We know that. We're joined by Richemont's former APAC chief executive to see if a rebound is on the cards for 2025. Stay tuned.
Principles, our policies in support of the Palestinian people will never change. Our policy in having a two-state solution will never change, and nothing will compromise it. And as long as we are, having the capability to be helpful, we will do it. We did that between Afghanistan, between Taliban and the US. We did that between different parties in Lebanon and Sudan and others. And that's basically the core of our foreign policy. It's been built based on mediation, on trying to help in resolving conflicts between the party. There are countries or people might not like it, but we don't ask everyone to like it, just to understand it.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here at the UBS European Conference in London, and these are your top stories. Donald Trump picks Elon Musk and entrepreneur Vivek Ramaswamy to lead a new Department of Government Efficiency. Now, the president-elect also nominates Army veteran and Fox News host Pete Hegseth to become defense secretary. Trump's nominations and the promise of tariffs are fueling concerns of more inflationary pressure, with the dollar and treasury yields edging higher. Plus, Germany's snap election campaign kicks into high gear, with Olaf Scholz making his case later today for another term, despite struggling in the polls. Now, let's talk a little bit of luxury. China's consumer slowdown has been weighing on luxury earnings this year. Richemont, LVMH, and Kering have all felt the pinch from more cautious shoppers in China, pulling back on spending amid ongoing economic uncertainty. While looming tariffs threats from President-elect Donald Trump also risk further hampering demand. Well, joining us now is Alain Lee. He is former chief executive of Richemont Asia Pacific. Alain, thank you so much for joining us.
Thanks for having me.
You have great historical context. You've been living, of course, in Hong Kong for pretty some time. You've been in charge of Richemont Asia Pacific for an equally long time. Can you put the slowdown into context? How severe, how bad is it?
Well, it's double-digit down for most of the groups. So in that context, it looks and sounds pretty severe. But I think one has to go back to just pre-COVID. If we look at the run that all the luxury groups had during that COVID period, it almost seems somewhat unnatural that we saw such double-digit growth throughout that period. I mean, Asia performed extremely well, and again, mainly thanks to China, and it was bound to slow down at some point. But overall, I think the industry is still holding up pretty well. I think some of the slowdown in China is also related to the fact that people are starting to travel again. So, if you look at the growth rates in Japan, they're clearly not driven by purely Japanese domestic consumers. A lot of people from China and from Asia are traveling a little bit more now. So I think there was a lot of interesting things that we all learned during COVID, and now I think we're gradually coming back to maybe a situation that's more reflective of what the market looked like pre-COVID.
So when do you expect actually the Chinese consumers to start spending again, like pre-crisis? And is that pre-COVID, or is it pre-crisis, so during COVID? Or
well, I think it's when the feel-good factor returns. Clearly, as everybody knows, China is going through quite a difficult situation now. Although any economy that's growing at near 5%, that has record trade surplus, that has savings in the region of over $2 trillion US, the fundamentals are there. But clearly, the feel-good factor, and maybe there has been so much luxury consumption, plus I think people diverting part of their disposable income to travel and to doing other things. So whether a rebound happens next year or the year after, I think will also depend on other things that might happen over the next year or two. But clearly, yes, there needs to be a return of that sort of feel-good factor that will make people feel more comfortable.
So, Anna, are you saying that basically, if we have tariffs or we have, a Trump presidency, which maybe means a more fragmented, that'll be more difficult to get the feel-good factor, or do we just need to, for China's fundamentals in terms of the economy, to get to a better place?
Well, I think that at this point, there's a lot of speculation about the tariffs and how that might, to what extent that that will be implemented and by when, and how China might react to that. So, we've already seen just at the end of September a set of measures that have been announced, which recently were confirmed after the NPC meeting, which address more of the housing issue and the financing vehicles of local governments. So I think that China has obviously a plan in place to at least keep the economy going at that sort of 5% per annum. But I think a lot of things will, there's so much uncertainty at the moment about what might transpire with the new administration in the US that we'll just have to wait and see.
When you look at different categories, what do you think rebounds first? I mean, there's, jewelry, it could be basically bags, it could be very expensive liquor.
Well, I think, there's certainly sectors, but I think that, at the time when there was a rising tide raising all boats, I think at the moment it's certain brands are still doing quite well. So now, you know, the cream is coming to the top, if you like. So I think that those brands that have continued to do well, that maybe, you know, didn't overexpand or, you know, still had limited supply, that still have that cachet, will continue to do well. In terms of segments, I mean, the jewelry segment has held up pretty well. Again, maybe people are seeing that, you know, there's more value in terms of the jewelry segment. Watches have been quite tough.
Yeah.
And then in terms of fashion accessory, again, there's some brands that have actually done well, you know, have posted very healthy growth. So I think it's difficult to give it a general context, but I think those brands that, you know, have that desirability, that still have that cachet, will hopefully continue to do well.
How do you think Richemont's been doing in this kind of environment? And there's also been changes at the top of Van Cleef and some of the other brands. I mean, again, what should we read into those?
Well, I don't know. I retired from Richemont a year ago, so I only know what, you know, everybody has read with the announcements that were made last week.
But you understand it more than most.
Well, I'm not sure. But no, it was pleasing, I think, to see that, you know, overall, Richemont did relatively well, and particularly, you know, in the US, in Japan. Obviously, Asia has suffered like a lot of other groups. But I think the brand equity that Richemont has is very, very strong. So in that respect, I'm sure that my ex-colleagues, you know, are doing all they can to make sure that that continues.
Do we have too many luxury companies? I mean, this is something that we talk about quite a lot. Is there, you know, we talk about overbanking, but actually, if you have too much, then fashion changes. So, you know, from minimalist to maximalist to gold to silver. We've never seen actually so many fashion companies like we have now. Do you think some of them actually need to either fail or consolidate?
Well, I mean, I think that happened throughout history. I can still remember Pierre Cardin. I mean, that's a long, long time ago. So, you know, I think
I'm told that the brand is back.
Well,
tiptoes, but it's back.
But I think overall, I mean, the luxury market has enjoyed, you know, an incredible run. Certainly, you know, over the last 20 years or so, with, you know, big groups being formed. And I think that's something that, you know, is still quite, it's only 20, 30 years that we've seen these luxury conglomerates being put together. Whether some brands will survive or not, I think, yes, I mean, that's just part of normal competition. But what's interesting is, you know, we're also seeing old brands that maybe, you know, were dormant for a little while being revived. So I think it's great for the consumer. They have a lot more choice, and I think that that can only be good for the industry as well.
I mean, there's a lot of choice. Thank you so much, Alan Lee, the former chief executive of Richemont Asia Pacific. Now, these are some of the other stories making news on Bloomberg today. The Washington Post actually reports that the president-elect will try to stop a potential U.S. ban of TikTok next year. Now, Donald Trump promised to save the popular social media platform during his election campaign. TikTok is challenging a January deadline to find a new owner not based in China under the threat of losing access to U.S. users. Then Volkswagen and Rivian have named leaders for their joint venture and showcased a prototype electric vehicle with the aim to launch products in 2027. Now, two companies agreed in June to develop battery-powered vehicles together, with VW expect to invest as much as $5 billion into Rivian. Shares in Siemens Energy are soaring this morning on strong demand for its grid technology. The company's CFO spoke to Bloomberg earlier.
We have a backlog now of $123 billion. To your question on our midterm targets, this helps fuel the future. We're very confident not only with how much we have in our backlog and what we're serving with our customers, but also the margin quality. We're very pleased in terms of our targets for this year. We've either met or exceeded in all areas, and this really makes the basis, or fuels the basis, if you will, for the future.
Well, that was Siemens Energy CFO Maria Ferraro. Now, coming up, UK Prime Minister Keir Starmer has laid out new plans at COP Summit to cut the country's emissions. And we speak to Dara Vias, Chief Executive Officer of Energy UK. That's next, and this is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative. If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Quickest way to end the war is to lose a war. But that will not bring peace. That will bring occupation of Ukraine. And it will make the whole world more dangerous, because the message then to President Putin, but also to other authoritarian leaders, is that when they use force, when they invade another country, they get what they want. So it's in our security interest to ensure that Ukraine prevails. So the challenge is to end the war in a way that doesn't lead to occupation, but to end the war in a way where Ukraine prevails as a sovereign, independent nation. At some stage, there has to be some kind of political negotiated solution, but we know what happens around the negotiating table is so closely linked to the strength on the battlefield. So if we want a negotiated solution to the war where Ukraine prevails as a democratic state in Europe, then we need to provide military support to Ukraine.
But so what does that look like, that solution? And is there a danger that the U.S. actually, manages to cobble something together, some kind of agreement, without the guarantee from the U.S. side of Ukraine's sovereignty?
Well, it's for the Ukrainians to decide what will be or would be acceptable solution. But there has to be at least two elements. One is a line agreed. But second, when such a line is agreed, then we need to ensure that actually it stops there. Because we have agreed, or the Ukrainians have agreed lines with Russia before. When they annexed Crimea back in 2014, we had something called Minsk I. There was a line, then Russia violated that, and we got Minsk II, a line further west. And then the Russian waited for 7 years and invaded full-scale Ukraine. So we cannot have what I call Minsk III, yet another line, which is not respected. So when a line is agreed, we need some kind of guarantee that Russia doesn't continue after reorganizing their troops. And therefore we need either to arm the Ukrainians so they can deter future aggression themselves, and or some kind of security guarantees. And NATO membership is, of course, the ultimate security guarantee for Ukraine.
Well, that was the former NATO Secretary General Jens Stoltenberg. Coming up, Elon Musk has a new project in the Trump administration, our big take on how the world's richest man could treat government as a money-losing social media network. That's next, and this is Bloomberg.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
As we spend some time here on the broader presidential race,
let's focus in on European politics.
Makes you wonder how politics might play out.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Welcome back, everyone. Now, Elon Musk has a new project to run, and that's Donald Trump's government. In today's Big Take, we'll look at how the world's richest man is about to treat the U.S. government as if it were a money-losing social network. Now, let's get more from Bloomberg's Craig Trudell. Craig, thank you so much for joining us. You understand Elon Musk's thinking more than most reporters out there. So Trump just formally announced the setting up of this Department of Government Efficiency. He said that Elon Musk and Vivek Ramaswamy will co-lead it. How should we expect this to go based on how Musk has run previous companies?
I think in one word we can expect chaos. I mean, just thinking back to just the last few years and how Tesla and Twitter have been run, we see him, go into his own companies, decide he wants to get rid of tons of people. He often overdoes it. In both Tesla and Twitter's case, he's gotten rid of people only to go back a couple weeks later and say, you know what, actually, could you please come back? I need you. How exactly that's going to go over in Washington and especially with the amount of attention that's going to be on him because of just how unusual all of this is going to be really fascinating to watch, especially since Trump, as we know, is not particularly one to tolerate negative headlines that sort of blow back on him.
Craig, what are you going to be watching very closely then in the next couple of, 3 months, 6 months, and then a year?
I mean, I think, it's kind of an obvious answer, but, specifically how this ends up benefiting Musk's companies, right? He has so many enterprises, that he's overseeing. Therefore, he has an awful lot of rules to have to follow and regulators to have to answer to. He doesn't particularly like having to answer to anyone else or follow rules or tolerate bureaucracy. And, what potential there is for, this to kind of blow up in his face. I think there's a lot of, attention being paid to the ways in which this could very much reap rewards for him and hopes, for example, that, Tesla will have an easier path now to getting driverless cars on the road. But, what are the risks here and, how tolerant is Trump going to be if and when, there's blowback over unintended consequences of doing away with all these rules, regulations, and bureaucracy?
So, Craig, what does it mean in terms of, also his appointments on who he's put in place and how he's run everything? Is there a danger that they cut too much, or is there a danger that they just cut the wrong things in government?
Yeah, I think that's a very fair question. And when we think about, the future of, say, the EPA, right? There are regulators who actually have set policies that are very beneficial to Tesla. When you think about fuel economy rules that the Biden administration has made more difficult after the Trump administration weakened them significantly, Tesla was very critical of the moves that the Trump administration made and was supportive of making these standards more difficult for its competitors, in part because Tesla is able to sell regulatory credits to manufacturers who can't meet those standards. And so that's been a source of quite a bit of money for Tesla over the years and really important revenue for them, particularly in their early days. But it's only going up as these standards get more difficult. And so, if some of these rules and regulations go away, it does have unintended negative consequences potentially for Tesla as well.
Craig, thanks so much. Craig Trudell there, our auto czar and Elon Musk expert. Now, the UK Prime Minister Keir Starmer has unveiled a new carbon emissions reduction target that keeps Britain at the forefront of the battle against global warming. Now, the UK will now cut greenhouse gas emissions 81% from 1990 levels by 2035, exceeding its previous target of 78%. Well, I'm very pleased to be joined by Dara Vyas, the Chief Executive Officer of Energy UK, the trade association representing Britain's energy sector. Thank you so much for joining us. We're here at the UBS conference. I know a lot of the focus has also been on whether the government will be able to deliver its promise of actually reducing bills by hundreds of pounds. Do you think they'll stick with that, and what do they need to do?
Look, I think it's a really, really ambitious agenda that this government set out, but I do think it's achievable. We had a report last week from the National Energy System Operator that set out, two of the main pathways that the government could take to reach that 2030 target. I think what's really important now is the government's response, which is all about what is the policy we need to get there, and that's what we're looking forward to seeing. But knowing that it is achievable, albeit ambitious, is I think the most important thing right now.
In terms of those bill reductions, what happens when the wind is not blowing?
It's really topical right now, obviously, and I think that's why it's so important that the report from the National Energy System Operator really focused on a whole system response. Yes, it is about clean power generation, but it's also about what is that whole system response. What are we doing on storage? How are we improving everything on the demand side, energy efficiency? In this country, we need to electrify so much more of our buildings and our transport, and I think that's a big challenge ahead of us, as well as really taking people with us on the journey. That's a big thing we need to be focusing on, is the demand side as well as the supply.
But do you think some of these power price spikes need to be accepted as part and parcel of this energy policy?
I think the modelling shows that actually bills won't increase that much, but I think it's all about what the package is. What we know is that far too many people are struggling to pay for what they need to use right now. So we are talking to government in some detail about what a detailed package of support would be that's targeted to those who can least afford it. But also, we need to improve homes. Every home in this country, we have a really leaky old building stock in the UK, and we do need to improve efficiency, decarbonise our heat, and really think about what smart product services can do to help us use energy when it's most abundant on the grid.
When do you think the UK will link its carbon markets to Europe?
It's a great question, and we're hoping as soon as possible, to be honest. I think it's great that the Prime Minister at COP has, made this new commitment with the NDC. What we know is our closest trading partner is Europe. We will be importing less fossil fuels. We will need to talk about what are the components we need for this clean energy transition. And we need to work really closely with our partners across Europe and, of course, internationally to make sure we can realise the ambition.
So there's no real advantage, actually, of keeping it separate?
In our view, we should go for linkage as soon as possible. I think it's really important that we align our carbon markets.
But bad debt levels are also rising among some of the consumers. Do you worry about that and the ability to repay?
Yeah, all the time. We are now at a point where bad debt is at its highest ever. It's £3.7 billion. The reality is we are still in an ongoing affordability crisis for far too many households, and we do need government support, partly to try and identify those people who really need the most help, but also because actually government does need to help and step in here.
Thank you so much for joining us, Dara Viester, the Chief Executive of Energy UK. I'm sure we'll hear from you very soon as we try to unpack all of this and understand the way forward for energy. Now, coming up later today, also don't miss our exclusive interview with the Minneapolis Fed President, Neil Kashkari. I bet you that's a conversation on inflation, tariffs, fragmentation. It may not be an easy time to be a central banker right now, especially not if you're at the Fed. That's at 1:30 p.m. UK time. Well, that's it for our exclusive coverage from the UBS, of course, European Summit. Up next, Bloomberg Brief. This is Bloomberg.
biggest risk in property and casualty, is that now climate change?
Yeah, so absolutely. When you look at natural catastrophes, the number of events has significantly increased, and not only the very big events like hurricanes, but also what we call secondary perils, so wildfires, floodings, and drought. And this leads to the fact that you have far more events and therefore a much higher cost of all of the natural catastrophes.
How do you really assess the risk of climate change? Because how can you possibly know whether there's going to be a hurricane or a flood? Is it just based on the past or the projection of the future? Or how do you do that?
Since the dynamic has changed, we need to also look forward. And what we do a lot, we work a lot with scientists who understand what the warming of the Earth and climate change will mean for the question of taking risk. And secondly, we take much less risk than we used to take because we have to be careful.
So let's suppose there are a lot of hurricanes. Is that good for property and casualty insurers or not? Good because people say, well, there's going to be more hurricanes, I should buy more insurance, or not good because you got to pay a lot of claims?
It depends. I would say it's good because it creates the awareness to do more prevention. What we see today is that, as I said earlier, there is more events. It becomes more and more difficult to insure, and therefore we work a lot with our customers around preventions.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live every trading day. Balance of Power live around the world every weekday, only on Bloomberg.
Good morning from our global headquarters here in New York. I'm Menace Crenny. You're welcome to Bloomberg Brief. Let's set that agenda. To the White House and beyond, Elon Musk and Vivek Ramaswamy gear up to join the new administration. President-elect Trump heads to Washington to meet President Biden. Nearing bankruptcy, Spirit Airlines, the talks hit the wall with Frontier on a rescue deal. And Apollo's Scott Kleinman warns we're not done with inflation.
Inflation is not tamed. The Fed can say what it wants. You just have to open your eyes and look around.
open your eyes, smell the inflation, see it, do whatever you want. But the equity market for the moment has just paused. Is exposure, it's the highest since 2013, according to Citi, but we have the Bank of America Bull Bear indicator. We're not at extremes yet, according to that. We could go further, and the no landing narrative in the Bank of America survey rises to 33% from 14%. Bottom of your screen is Spirit Airlines. We said that we'll talk more about that with one of our reporters, of course, running into the headwinds of trying to avoid bankruptcy, but it looks all but inevitable at this stage, according to reports. Roll it over and have a look at the bond market, because this is where it's shoot first and ask questions later. Now, at the moment, we've some stability, but I can tell you the twos hit the highest level since July last year, and you're seeing yields up, yes, on the threes, the 30s, the very long, up by 10 basis points. So we're just recalibrating right now ahead of the CPI. Your risk is you get a hot CPI, but just bear that in mind from Apollo and from Scott Kleiman. Inflation is not tame. Dollar yen is on the march. We broke through 155, one double nickel this morning for the first time since July. We've been rising for 3 days on the dollar. I mean, the dollar is surging. It's the highest in 2 years. So you're going to start to hear the intervention narrative again. The Ministry of Finance will probably begin the jawboning, but some of the markets say you're going to get all the way up to 160 before you see any kind of intervention. Let's take some of those thoughts to Mads Peterson of Human Edge Investment Technology, writing this. Trump wants to invest and spend. This will be inflationary, but not as inflationary as Biden's politics ended up being. The architect of what we see as a policy created inflation was the FOMC, and the ex-FOMC chair, who in her role as Treasury Secretary argued for running the economy hot. Mads joins me now. Mads, thank you so much for being with me this morning. Charlie Evans was with us yesterday in conversation. He said when he was on the Fed, they hadn't quite anticipated the inflation that they would get. When you look at the landscape, we still have a lot of pieces of information to get. What scale of inflation are you expecting? And do you think it could be as virulent, perhaps, as some of the worst suggestions from the bond market?
I don't think it's going to be as virulent as the worst suggestions from the bond market. I think inflation is more or less under control, meaning if it moves up 0.5% from here, it will scare the bond market, but it will not matter much for the economy compared to what we saw under Biden and Yellen's combined effort with the FOMC to run the economy hot. So I think we have to remember monetary policy is still quite tight. So there's a pressure down on inflation already now, and we're talking about taking off that pressure. So I think inflation will be between 1.5% and 3% in the coming 4 years, and I think it will be the same in the coming 1 year.
The narrative that I'm hearing from Scott Bessent, who might be Treasury Secretary, is talking about making savings over a 10-year period. You listen to Elon Musk, who's on his way to Washington for a role in how to make government efficient. Okay, he branded around $2 trillion on a stage, but there's an interesting narrative from Bessent and Musk and others about perhaps a little bit more aggressive hold on costs.
That would be absolutely positive. I think the one thing which we have missed around the world the last 10 years is a hold on cost. The one thing everyone has done is overspending. It's everyone from Germany, France, my little Danish country, even the Swiss think the government has been a bit overspending, which is not the case. And the US has definitely been on the high spending side. If we get rates down, and credit spreads are very low now, very tight, yeah? If we get rates down, you can get growth without spending quite as much on the fiscal side. That would be very good. That would be very positive. It's not exactly what the incoming president has been promising, but we hope that he will listen to his very competent advisor here and actually tighten a little bit so that we don't get this thing spiraling out of control.
Well, the one thing that he does, we know that this president does pay attention to, is the stock market and the prices therein. Before the election, you shifted an additional 10% into large cap equities. You've been pretty much an Uber bull all the way through every time we've caught up with you on Bloomberg Brief. To what extent are you reaching beyond that large cap world? Because if I go back to 2016 and I look for the redux there, it was Russell 2000 that put on 14% and small caps that put on 16% between election and the end of the year. I know we've done a lot.
Yeah. I think we've done too much to go into additional beta in my portfolio. I'm 40% overweight equities compared to 60. So I think the next move we will be making is actually taking off 40%. It's not time yet, but it could be time, and I encourage everyone to have a plan for that. I think rather than dipping further into higher beta by buying small cap or adding to our already significant weight in technology, we are more thinking this looks good, it can run somewhat further, but the next big move is going to be a risk reduction on our side, is my expectation.
Do you think the next big move in markets is a risk reduction when they see the first salvo of tariffs, when they see the first narrative and oratory from the Trump White House? Do we have time between now and, let's say, the end of Q1 to remain long and strong?
Well, we remain long and strong for now, so we feel we have time. We think we have time. Our algorithms tell us we have time. Credit spreads they were tight. They are at the tightest they have been for a long time. So we think we're going to see a situation where earnings will surprise positively, also in fourth quarter, that we're going to get reports for in the first quarter. And after that, there's a lot of risk, because if you like Trump or if you don't like Trump, he's going to be in place. He's going to have done a lot of what you like if you like him, and he's going to have done a lot of what you don't like if you don't like him. Yeah, that's not my job to decide. But he's all going to have done a lot of the things, and what's then going to take it further? Remember, S&P is up about 640, 50% the last 20 years. It's the last 10 years. It's a lot. It's more than 10% a year, and it cannot continue.
What's the best hedge then? If you think the next material move is to the left tail rather than to the right tail, what is the hedge in that case?
So the big question is, how do you time the time you buy decent duration government bond or other AAA assets? Because as you rightly said earlier, we have seen the 10-year move up, we have seen the 5-year move up, we've seen the 2-year move up. So there is a chance, which we haven't had for a long time with big risk reductions, to buy the U.S. Treasury. If we even get a Treasury Secretary who's considering actually fixing the fiscal problem, I don't think it's the end of the world, the problem, but there's a fiscal problem. If we see a secretary who's focusing on fixing that, then the U.S. Treasury is very attractive. The problem is the last 2 years, everyone who tried to buy that duration burned their fingers, and it did the last 2 months as well. So we need to find the right time and the right duration to buy. And then it's AAA rated assets, so like development bank bonds, or it's U.S. Treasuries. You can discuss what the rating should be, but they're safer than any other government bonds, and those are the ones we're going to be looking to buy.
Look, whilst I have put forward what Musk is saying on a stage and what Bessent is saying on a podcast, and if he does become Treasury Secretary, there's no doubt about it, the fiscal numbers that we've run is that under a Trump presidency, if they execute everything that he promised, and that's a lot, then you're looking at, it's a heck of a lot, and we probably won't get that, 7.75 trillion. My risk reward in bonds, Mads, is it really to buy bonds at these levels with the risk of that fiscal largesse, which was promised?
No, not if Trump does everything he promised. But I don't think Trump has ever done everything he promised. I don't think that we have seen ever. So I don't think he will do it this time either.
Okay, well, we'll see who else is approved for cabinet, and then it will begin to take shape. Mads Pedersen of Human Edge Investment Technology. A little bit of breaking news for you on Bloomberg this morning. We have Senator Elizabeth Warren is set to become the top Democrat on the banking panel. Warren is to succeed Sherrod Brown on the Senate panel, so that's going to set up for an interesting discussion when it comes to deregulation in the banking industry, as has been much promised and priced by the markets. There are other stories trending on your Bloomberg terminal. This is what we've got for you. Seven & I is considering a management buyout to take itself private. The deal's worth $58 billion. That's according to Bloomberg. Talks are ongoing, and the deal could be difficult given this size. It also may not proceed if Couche-Tard rescinds its proposal to buy Seven & I. Swedish payments firm Klarna is filing for a US IPO after months of speculation. The number of shares to be offered and the price range have not yet been determined, but analysts estimate Klarna's implied valuation somewhere around $14.6 billion. Just Eat Takeaway is selling Grubhub to Wonder for $650 million. Steep discount to the $7.3 billion price tag it commanded during the early days of the pandemic. Wonder will pay $142 million in cash and take on $500 million in Grubhub debt. And the deal is expected to complete in the first quarter of 2025. Coming up in the show, President-elect gathers his loyalists as cabinet picks roll in. more on that. And we count down to the latest inflation data with Citi's Veronica Clark in just under an hour, right here on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
As we spend some time here on the broader presidential race,
let's focus in on European politics.
Makes you wonder how politics might play out.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Earnings season is here.
Third quarter earnings season, as we've been talking about, really in high gear.
Bloomberg is first to break the numbers.
We have some big earnings after the bell. Earnings from Caesars crossing the Bloomberg terminal.
Mondelez is reporting
Reddit, AMD, Snap.
Let's keep the conversation going.
With the smartest insights.
The bar keeps getting higher. 20% growth rate when your comps get tougher. How much can you beat and raise?
Continuing coverage on Bloomberg. Context changes everything.
It's Bloomberg Brief. I'm Manus Cranny here in New York. President-elect Donald Trump has announced that his billionaire backer, Elon Musk, as well as the former Republican primaries rival, Vivek Ramaswamy, will lead a Department of Government Efficiency. Part of the Save America movement, Musk is quoted in the statement as saying this will send shockwaves through the system and anyone involved in government waste. Joining us now for the latest incoming cabinet picks and perhaps a bit of chaos ahead of us, it is Kevin Whitelaw. Kevin, good to see you. So this department proposed by Musk and Trump before the election. We've heard lots of numbers bandied around about Save America. What is the reality of the scale of fraud, as is said here, fraud and improper payments that can be dismantled? What's the scale of change that we can look at?
Well, you know, I think that this is something that administrations over the years have come in and talked about. Vice President Al Gore was at one point in charge of a similar kind of operation back during the Clinton administration. The numbers really don't add up in any way to the kind of scale he's talking about unless you're really talking about stripping away at some of the fundamental programs that are supporting Americans, such as Social Security and various health insurance, Medicare, Medicaid. He's talking about $2 trillion. That's much bigger than the discretionary budget of the U.S. government in any given year. So there's essentially no way to accomplish it without hitting defense spending, without hitting programs of various kinds. So certainly not just waste and fraud. It would have to go deeper and really reshape, sort of what the actual role of government is in society. So we'll see if it actually goes that far. And obviously, Congress would have to go along with it. And a lot of folks in Capitol Hill, including Republicans, have a lot of stake in a lot of the programs and a lot of the spending that goes through there.
Okay, so it's not going to be as easy, perhaps, as the hubris of being on stage. Senate returns today, and we've just announced the news there that Elizabeth Warren will succeed Sherrod Brown on the Senate Banking Committee. Picking a new Senate leader, Mitch McConnell is on his way out. What's the running and riders for the Republicans?
Well, it's going to be an interesting contest because in a normal sort of universe, I think the two sort of McConnell deputies, John Thune of South Dakota and John Cornyn of Texas, would be really the ones that would be the favorites, the ones vying for it, and would have by far the best sort of chance from inside the chamber and inside the Republican sort of caucus there. But Rick Scott of Florida does appear to be Trump's choice. He's the one who sort of made the most noise about going along with Trump's demand for recess appointments, something the Senate hasn't allowed in years, which because it's a process that involves giving up Senate approval of nominees. So we'll have to see whether Scott can actually break through or not, but it will be a very early test of the amount of control that Trump is going to have over that chamber.
Well, what is it? Rick Scott said he has Trump, Elon Musk, and Tucker Carlson are all supporting me. So it's interesting who he's saying are in his camp. Let's just round it off. I mean, we're getting name after name after name, but we understand that Trump has picked former Fox News host and Army National Guard officer Pete Hegseth as his defense secretary. Now, this man is well qualified in terms of academia and in terms of his tours of active duty. What do you think the main driver for Trump here is in terms of background in the military or other issues?
I mean, I think it's twofold. One is simple loyalty, and Trump is showing that loyalty is by far the most important thing in all of his picks so far. And the second is someone who's good on TV. You know, a lot of the way that Trump appears to be evaluating these nominees is by simply watching them on TV, watching their clips, watching how they do, and watching how they deliver his message. Normally, when people are trying to choose someone to run the Pentagon, which is one of the biggest bureaucracies in the world, has an unbelievably complex set of operations, personnel, missions, and facilities, you pick someone who has a certain amount of managerial experience. That does appear to be entirely lacking from the biography of Pete Hegseth. So Trump's clearly going in a very different direction with the way he went through this particular pick, and I think it's already unsettling both people inside the Pentagon and the military, but also on Capitol Hill.
Okay, well, let's see the other names that come through, and of course, whether they get approved. That is going to be the telling moment. Kevin, thank you very much. Kevin Whitelaw on the Trump appointments, which are coming in hard and fast. Coming up on the show, Spirit Airlines getting hit in the pre-market session. Reports are that it is nearing bankruptcy. More on the story. The stock is down 61% unchanged.
In case you missed it, on Bloomberg Technology.
We are very focused on playing one game and one game only, and that is
being free, frictionless entertainment for consumers. But what I will say is we are doubling down on the strategy. We believe it's working. We think the tailwind's in our favor, and it's on us to continue to deliver.
Whenever you're doing something innovative that hasn't been done before, there's a lot of trial and error and iteration. It just always has these zigs and zags along the way, and I think where we've been successful is really being reactive.
Hollywood is the history of technology. Like, we are here because of a technological breakthrough, right? And so we sometimes forget that art and technology kind of like come together always. And for us, it's like demystifying a little bit the technology. Again, if you understand AI as a tool for humans, then it changes the narrative. And it's less about fearing it and more about embracing it.
Don't miss Bloomberg Technology, live every weekday.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live every trading day. Balance of Power live around the world every weekday, only on Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
It's Bloomberg Brief. I'm Manus Cranny, right here in New York. Shares in Spirit are tanking, as we've shown you pre-market. The airline is said to be nearing bankruptcy after discussions for a tie-up with the rival Frontier. They fell apart, and it's now in talks with the note holders on its debt. Sid Phillip joins us now. Sid, here we are. It's now down to a question of whether bondholders do a deal. What does that mean for equity holders? Is it wipeout?
It would potentially wipe out the equity holders. I mean, Spirit Airlines said as much, that any deal with the creditors would wipe out their equity holders. And so essentially this would basically mean that Spirit Airlines can get rid of about $1.5 billion of debt that's coming due in 25 and 26. They can restructure the debt, and they can then carry on as a new entity, essentially going into the business that they've been in.
What does it do for customers? I'm just looking at some of the analysts. TD Cowen are saying it creates risks for customers booking away from the airline, resulting in even greater pressure. So this is like the self-fulfilling vortex, the doom loop.
It does create a sort of vicious cycle for the airline, because essentially customers are less certain about their bookings, and they may sort of hold off on bookings, which would then make it much more harder for Spirit to actually emerge from this potential Chapter 11 process and actually sort of keep going as a viable carrier. The airline has cautioned that essentially unsecured creditors, including aircraft lessors as well as customers, would not be impacted by this process. And so that would sort of give them a sort of sense of relief, but at the same time, airline customers tend to be sort of very temperamental, and they look at sort of what their potential is if they're booking months in advance, whether they can actually get their flight, and that will be one of the crucial factors in deciding bookings, and that could potentially upset bookings and forward bookings for Spirit Airlines.
Look, Sid, just one sort of blue sky thought. We're going into a new presidential regime here in the United States of America, one that one would assume is going to be friendlier to M&A deals. I mean, when Biden killed the deal between JetBlue and Spirit, he said this was a win for American consumers in competition. Briefly, do you think that we're going to go into a regime change in M&A?
There is a lot of speculation that there will be more M&A, and there will be more M&A opportunities for the airline industry. I mean, the consolidation hasn't really moved ahead. I mean, we've seen the Hawaii and Alaska deal go through, but other deals, including JetBlue's partnership with American Airlines, was also blocked on antitrust grounds. So it will be interesting to see what the airlines do and what the potential combinations are, and what the new administration actually determines is the best course for action in terms of whether or not they approve these M&As and whether or not they allow the creation of much larger airlines that can challenge the big four in America, including United, Delta, Southwest, and American Airlines.
well, certainly if you take the narrative from Trump, America first, America strong, it could well be a little bit of a different regime. Sid, thank you very much. Sid Phillip on the very latest with Spirit Airline. Let me take you through some of the front pages on the rest of the world. This is what we've got for you. First up, the Associated Press talks about President-elect Trump heading to Washington to meet President Biden at the White House. Now, the two will meet in the Oval Office at around 11 a.m. Trump also planning to meet with Republicans from Congress as they focus on day one priorities. Next up, Bloomberg leads with Man Group planning a round of job cuts as it reviews its staffing needs. The review will lead to job cuts in low single-digit percentage terms. Now, the cuts will mainly focus on operations, middle office, and technology roles. And the Journal leads with Volkswagen increasing its investment in Rivian by $800 million. In return, the German company gets access to a blend of Rivian's onboard computing and software. The deal highlights the depth of the challenges they face in the race to compete with Tesla and the Chinese competitors. Currency market is powering ahead. You've seen the strength in the dollar at a 2-year high. It just comes back to flat at the moment. But dollar yen, we did make it through 155. Will we re-attack the upper levels? Let's see.
In recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that was started in 1977, when by then I had a little research station, and 4 of my students were kidnapped, and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, you know, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
Global headquarters in New York. Welcome to Bloomberg Brief. I'm Menace Cranny. Let's set your agenda. To the White House and beyond, Elon Musk and Vivek Ramaswamy gear up to join the new administration as President-elect Trump heads to Washington to meet President Biden. Nearing bankruptcy, Spirit Airlines, the talks hit the wall with Frontier on a rescue deal. And Apollo Scott Kleiman warns we're not done with inflation. More on that exclusive interview from Danny Berger in just a moment as we count down to the CPI. Good morning to you. We're pausing for breath in these equity markets, down an eighth of 1%, but we're still holding above that magical psychological level of 6,000. Spirit Airlines tanking by over 61% as they career towards bankruptcy. But the question is this, as to whether this equity market is, is the exposure so long that there's nowhere else to go? We just heard from Mads Peterson that the next material move in this equity market is down. You want to take some money off the table. However, then I look at Bank of America, the bull-bear indicator, it's on the rise. It's not at extreme levels. And as for no landing, well, that moves from 14% to 33% in terms of the fund manager survey. But perhaps the unease is in the bond market. This is where you saw the two spike higher yesterday to the highest since July. It was timely that Danny sat down with Kleinman over at Apollo, telling the market and telling the world, more on this in a moment, that, we're not vanquished on inflation yet. The issue for the market is this today. CPI could be hot, expected to be a little bit hotter than normal. The market is shaving back its December bets, and that is the critically important point here. 441 is where we are on 10-year bonds at the moment, and that latest read on the U.S. inflation is due in 3 hours' time, actually. So we will count you down to that on surveillance. Now, Apollo's Scott Kleinman told my co-host Danny Berger that the Fed's fight against rising prices was not over yet.
Inflation is not tamed. The Fed can say what it wants. You just have to open your eyes and look around. Think about the last flight you were on and how crowded it was, or the fact that you're paying $85 for a steak and next week it'll probably be $90. Or housing prices, right? Everywhere people want to live, right, there's not enough homes. Housing prices are going up. We see inflation not as beaten, but as suppressed. And the more the Fed cuts, the more you're lifting your hand off that lever to hold inflation down.
Joining me now, Veronica Clark, economist over at Citi. I want to have a steak at $90 where Scott Kleinman is. But on a serious note, I think it's one of the most honest appraisals of the real economy. Open your eyes. There is this difference between what the Fed is saying and thinking and what the reality is. And I think Kleinman very much brought reality home to bear yesterday.
Yeah, in some ways I would agree and disagree, of course.
Let's go.
I think there's maybe 3 different time frames we need to look at in terms of some of the inflation data. Very short time frame, of course. Today we might get a hotter CPI reading. Of course, the Fed is going to be very reactive to those individual monthly prints. More medium term, I do see a lot of disinflationary pressures still. The labor market has loosened. A couple weeks ago, we got an employment cost reading for the third quarter that looked pretty normal. It was the softest in a while. Home prices are pretty subdued. We see that in the monthly Case-Shiller data. They'll probably stay that way with higher rates. But longer term, I can see inflationary pressures coming back for sure.
And that may well come from fiscal and immigration policy. Let's just disaggregate a little bit of what you said. Somebody's out of kilter here. Either Apollo is out of kilter or the economists are out of kilter. But you warned very clearly, we are in a slowing trajectory in this labor market, and that long variable lag has yet to bite.
Right. I think it's maybe starting to. I mean, we certainly see weakness in the rate-sensitive sectors like housing and manufacturing, even small businesses that are going to be more rate-sensitive. We do see, demand slowing in those sectors. Certainly, the larger corporates, higher-income individuals are doing well. But I do think, the increase in the unemployment rate is telling you that this is a looser labor market than even 2019. Chair Powell says that also. I don't think the Fed is going to be particularly concerned about those high-level drivers of inflation in the next year.
So when you listen to the data sweep that you've just given me, that would take me to a 25 basis point cut in December. Additional hedge, additional insurance. Yet this market, it's a toss of a coin, and 50-50. In other words, they're shaving back quite furiously in terms of that. Can you see the narrative for a pause, despite what Kashkari said? Yes.
Yeah, it's going to depend on the data, of course. It will depend, of course, on today's CPI reading. Will depend very heavily, I think, on the next employment report. We'll get that November employment data, I think, the day before the Fed's blackout period. That's going to be a really important one. But yeah, I mean, there, of course, is a scenario where inflation is still maybe a bit uncomfortably high and they do pause. But I do think, this would be a pause amidst a broader cycle, getting at least back to neutral, because the labor market has weakened, and that's a really important point to remember. It's not just about inflation here.
I look at this bond market, and what goes through my mind is it's kind of shoot first and ask questions later at the moment, isn't it?
Yeah, we're very reactive to whatever the latest data point is. The narrative of the last 6 weeks, of course, has been this, reinflation. Activity is strong. It really started with that strong September employment report. Of course, looking forward maybe to post-election policies. But for the Fed, they're going to be reactive to what current conditions are, current data, not necessarily preemptive in reacting to hypothetical policies that might not happen yet.
Agreed. 3.3% on core CPI today. You say don't get too ruffled by disinflation. The train of disinflation remains for you despite that 3.3%, if that's what we get.
Yeah, for the next
That's
year
on the core,
at least, I think so. Yeah, I mean, we do think that it's a cycle, a normal cycle. It's taking a lot longer to play out, but the labor market is loosening, housing is weak. This is evolving like a normal cycle, and you can get something that looks like 2% inflation in the next year.
When we talk about the challenges for the Fed, it's about comprehending policy that they don't have detail on yet. You listened to Kleiman in that interview yesterday. He said the economy has done pretty well in an anti-business environment from a regulatory perspective. If we go through into 2025, we can assume, A, we're going to get some kind of fiscal stimulus, some kind of tax cuts, and some kind of shift on regulation. So the landscape for growth is pretty solid. Is it into 2025 in your perspective, or is it challenged?
Yeah, I think it's a bit more complicated. I don't think we can just look at the 2016 playbook and assume that this is going to be the same kind of positive growth environment. We will get maybe some corporate tax cuts, right? But we already got the big ones in 2017. We'll get the extension of the individual tax cuts, but that's not so much growth positive as it would be just negative if we let those expire. Certainly, we're looking at wider deficits. Deregulation can be growth positive, but a lot of the support for the economy over the last year has come from maybe stimulative fiscal policies, Inflation Reduction Act, the infrastructure, and if some of those policies are rolled back, that would have the opposite impact.
So those are the headwinds. That's a recalibration of the verbiage that we've been coming out with. Then, if tariffs are implemented, there's boomerang. Nobody's going to sit by and just let America slap tariffs on them and sit idly by. Just run me through your thinking in terms of the blowback from the rest of the world.
Yeah, I mean, I do think a lot of the tariff policy will maybe be a negotiation tool, so we don't exactly know what it will look like. But certainly in the 2018 tariffs, we did get retaliatory tariffs on things like soybeans, for instance. So yeah, we really just don't know what will evolve yet.
And in terms of the most optimistic view for 2025, I've talked about this with our last guest and with our politics reporter. You've got Musk and you have Vivek going to, as it were, recalibrate efficiency within government. We don't know what that quite means. But then, and I'm very focused on this, Scott Bessent, potentially Treasury Secretary, talking about, again, taking inefficiencies and costs out and cutting spending. Maybe this is the more under-talked about tail risk.
Yeah, no, I think I would agree with that. I think certainly the market has looked at the election outcome and is presuming wider deficits, which I think most people would agree with. But maybe we do get a lot of cuts to fiscal spend. Tariffs do raise revenue. Maybe the deficit impact isn't as much as we're expecting. In which case, yeah, you would get rates pulling back again, maybe.
And I leave you with a thought on what he actually said. It was basically, I think we could get $100 billion a year over 10 years. That's $1 trillion in this cockamamie CBO scoring, and that will stabilize the bond markets. So let's see. Bessent is a market participant and well known and understands the bond market very well. Veronica, thank you very much for coming down to CPI. We'll take you through those numbers a little bit later on. And you don't want to miss, we've got an interview with the Minneapolis Fed President Neil Kashkari himself. He joins the Bloomberg team a little bit later on as the US CPI print drops at 8:30 a.m. The surveillance team will take you through that. Coming up, President-elect Trump gathers his loyalists as cabinet picks roll in. More on the state of play on Bloomberg Brief.
Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Why should I want to invest in the pharmaceutical industry? Is it going to continue to grow as it did last year? And what about your own company? Do you think it's going to have good growth prospects over the next couple of years?
I think the reason to invest in the sector is the science. I mean, when you look again, if I go back into the history, for most of the last century, we were only giving people pills and small molecule drugs. Then we discovered that we had this whole world of biologics, and we could treat diseases with biologicals. More recently, we've discovered that we can reprogram your cells, we can edit the genome, we can use these RNA therapeutics to completely transform areas of medicine. Those technology areas are at their very nascent stage, and what we're going to find is they're going to open up whole new areas of growth from our business standpoint and a human health impact standpoint. We hope that as we work in our areas like cell therapy and RNA therapeutics, we will also be able to climb to a whole other level of market cap over time.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Today's your Bloomberg Brief. I'm Manish Crenny here in New York. Entrepreneurs join the president-elect Donald Trump's cabinet lineup. Elon Musk and Vivek Ramaswamy have been tapped to lead a new Department of Government Efficiency, DOGE for those who don't know. Part of his Save America movement, Musk is quoted as saying this: "This will send shockwaves through the system and anyone involved in government waste." Let's bring in our Bloomberg government reporter. It is Kate Ackley on this. Kate, the department was proposed by Musk and Trump before the election. You saw you saw Musk jumping up and down on a stage going, "We're going to save $2 trillion." I mean, these numbers are staggering, but the reality of maybe what they can achieve. Can you just talk me through about what we know about this so far?
Absolutely. I mean, I think the business sector that, is affected by a lot of these government regulations is sort of bracing for an era of disruption with Musk and Ramaswamy and others, joining the administration or advising the incoming administration in some way. But I think even with the announcement yesterday, the official announcement of this, there's still more questions than answers. It made it sound like Musk and Ramaswamy would be outside advisors and would partner with the Office of Management and Budget. That was in the, in that release. So what does that mean? And, does it mean that Musk doesn't have to leave his, Tesla or SpaceX, but does this as a kind of side project? And how does that all work? I mean, is this really a new department? Will Congress be standing up a new piece of the federal government? Or is this going to be sort of more of a project that Musk and Ramaswamy and others, give advice to OMB and people in the administration?
Well, I suppose if you look at what he did with X when he joined that, I don't necessarily know one can get to that level of chaos of restructuring. By the way, the government spends $6.75 trillion. A lot of that goes on Social Security, healthcare, defense. So Congress is going to have something to say on this, as well as veterans, in terms of where you take that money from. Let's talk about the Senate. We've got senators voting for a new leader today. It's going to be the first time in 2 decades. Mitch McConnell moves along. So who is the hottest ticket for that leadership race?
Well, there are 3 contenders, and this is a closed door secret ballot. So, outsiders, and there are people on the Trump team that have weighed in. They like Florida Senator Rick Scott. that's who sort of Team Trump is pushing for. But you have two longtime senators seen probably as the front runners. I would say in my conversations with people that the big front runner is Senator John Thune, who's been in the Senate, for a couple decades, and has just been seen as a rising star since day one when he got there. Has a lot of ties in the business community. He's actually a former lobbyist from between his time serving in the House and the Senate. And then Senator John Cornyn from Texas. Both of them are huge fundraisers. Cornyn, I think, has had bigger fundraising. If you look at over recent years, Thune really stepped up his fundraising. Not that that's the only thing. But, when you go into these battleground districts, some of the new senators they have, the Republicans that have just been elected, have gotten to know these leadership contenders who were there helping them raise money in their own races.
Well, Rick Scott has come out and said he's got Trump, Elon Musk, Tucker Carlson, all supporting him. So let's see where that secret ballot goes to. Kate, thank you very much. Kate Ackley getting up early again in Washington. One stock we are tracking through the morning pre-market at 5:46 a.m. is Spirit Airlines, down 64%. Continues to slide. As it said, it is near to bankruptcy, according to Bloomberg sources, after discussions for a tie-up with a rival Frontier fell apart. Benny Camel joins us now. Benny, look, Spirit, it's pretty much in an awkward spot here. It's got debt. It's got to negotiate with the bondholders. It looks like an equity market wipeout, and the bondholders may get a haircut.
Yeah, you're absolutely right. So this is a company that's been in crisis mode for a while, and they're trying to chart a path forward here. We know that they, at the start of the year, for a while, had tried to find a partner. The partnership with JetBlue, that was blocked at the start of the year because of antitrust concerns. They then turned to Frontier, another ultra-low-cost company, and that was seen as a more viable option because that's a smaller company, and there wouldn't have been the same kind of regulatory hurdles. But we're hearing that too might have fallen through. So really, at this point, they're in a dire spot. They're bleeding cash. They're actually not in position, they said yesterday, to release their latest earnings. And the path forward really might be what you described, some sort of a Chapter 11 bankruptcy filing, and that would wipe out equity holders. But it might be a chance for the company to start over.
Well, they certainly tried, haven't they? I mean, with JetBlue, that deal was pushed away by regulators. Any other chance of, as it were, as a white knight riding in here? Or is it this is the last-ditch attempt? I mean, well, the customers still book with it. That's the doom loop. That's the risk here, isn't it?
Yeah, you're absolutely right. That's always the risk with airlines because, if you're a customer, you're buying a ticket not for tomorrow, you're buying it further out, and you want to feel good about being able to actually use and board that flight. And if a company files for bankruptcy in an airline, it doesn't mean that they will go out of business, but, to use your doom loop analogy, we will probably see more people saying, you know what, it's too risky for me, there are options out there, I might go somewhere else. They might lose pilots, they might lose staff. So holding the business together under a circumstance like this is going to be very difficult for the company.
Benny, thank you very much. Benedict Camel there tracking the Spirit Airlines story. CPI is coming at 8:30 a.m. A little bit later on. Our very own Danny Berger spoke exclusively to the Apollo co-president, Scott Kleinman, as the markets await the latest read on inflation. Let's take a listen.
I think rates are going to be higher for longer because inflation is not tamed. The Fed can say what it wants. You just have to open your eyes and look around. Think about the last flight you were on and how crowded it was, or the fact that you're paying $85 for a steak and next week it'll probably be $90. Or housing prices, right? Everywhere people want to live, right, there's not enough homes. Housing prices are going up, notwithstanding, the backdrop of the rate environment. And so we see inflation not as beaten, but as suppressed. And the more the Fed cuts, the more you're lifting your hand off that lever to hold inflation down. And look, nobody's got a crystal ball, but we live in a world that is the mega trends that are driving the world today are pretty inflationary. You have things like the build out of the digital infrastructure. So between chip fabs and data centers and the power that's needed, I mean, that's $100 trillion we have to spend over the next decade. The decarbonization, the deglobalization of the economy, all of these things are inherently very inflationary. Then layer on top of that what might be, some of the new administration's policies that are, that sound inflationary, deficit spending, some of these other programs that are going to add to inflation. It's very hard to say that inflation is beaten or inflation is over. That doesn't mean inflation is going to run away. It just means we're going to have to live with a higher rate environment for a lot longer.
And you've been really good and really right on this idea that we're going to have a higher rate environment. And one of the things you said at a conference in Berlin this year, in what feels like a lifetime ago in June, is that not everything is going to be okay, that we're going to have some refinancing coming into the market, and it's going to be a problem for a lot of private capital. Again, that was in June. Is the moment of reckoning nigh now?
For sure. I mean, we're getting closer and closer to this. As I alluded to back then, the private equity industry, invested in a lot of companies, over the 5 years leading up to 2022 before the rate change happened. Good companies, but at very full prices. So sitting here today, when private equity companies firms would be normally selling their portfolios, they're stuck. They're holding on to big portfolios of good companies, right? I'll posit that most of these investments are good investments. They just paid too much for them given the current rate environment. And so they are saleable, but maybe not at prices that these private equity firms would be happy with. And so they're going to hold on to them. And by holding on to them, you have grumpy LPs who aren't getting their cash back at the rate they thought. And then you also have refinancing issues, right? Okay, well, now if I'm holding this longer, I have to refinance it. And so how do I do that? Some companies will have no problem. Others will have to start being a little more creative. And we're absolutely seeing that. Part of our business model is to help those companies, other sponsors that might need capital somewhere in their capital structure to help get through this next hump. Because again, most of these companies are actually good companies. The sponsor just paid the wrong price for it.
Is the matter made even worse at this moment, though, than it looked in June, considering we might have more inflationary policies coming in 2025?
I think it only lends credence to my theory. We'll put it that way.
Great exclusive conversation there by Danny, my co-host with the Apollo co-president, Scott Kleiman there. And really in the eye of that spike higher in yields yesterday, inflation is not tamed. Coming up, we'll take you through your trading day, set you up the key data. President Biden, of course, meeting his successor in the Oval Office. We'll take you through the agenda in just a moment.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Fixed Income Fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
Day ahead looks like this. We're coming down to the CPI, 8:30 a.m., expecting 3.3% on the core number. Don't miss our interview. We've got the Minneapolis Fed President Neil Kashkari. That is just after 8:30 a.m. Plus, President Biden and President-elect Trump will meet at the Oval Office at 11 a.m. When it comes to understanding these markets, it's still ground zero. It is the dollar that is on fire, and the dollar is on fire against the yen very specifically. You can see they're up for a third day. We broke through 155 a little bit earlier on the day. We're back at that level. When do we get the intervention? That's it for Bloomberg Brief. Surveillance is right up ahead.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
And create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow.
There was a feeling that I had in talking to Steve that he was a very different kind of CEO. He was focused on products, and had a belief that small teams could do amazing work. I love that vision. And I also love that in an environment where everyone was going to an enterprise kind of company, he wanted to refocus Apple on consumers. And it was brilliant because at the time, nobody was doing that. Everybody thought you could not make any money selling to consumers. And, you know, I've never thought it was a good idea to follow the herd. I thought I had a chance of a lifetime to work with the creative genius that started the entire industry. And I didn't want to pass that up. People have forgotten this, but Apple was on the verge of bankruptcy. And it was a really awful time, and people advised me not to come to Apple because they thought that it was headed straight down. But I saw something different. I saw the sort of the sparkle in Steve's eye. And it just meant that we could pull out this turnaround for this American treasure. And I'm so glad to have been a part of that team. He taught me the value of innovation, the fact that small teams could do amazing things. I look at the size of the iPod team initially. I look at the size of the iPhone team. These were very small teams in the scheme of things. Hiring the best people to surround you, that challenge you, that have skills that you don't, and being confident with that. And also, not to be married to my past views. You know, not to be so proud you can't change your mind when you're presented with new evidence and things. He could change like this. I initially was sort of taken aback by that, and then I became so enamored with it. Very few people have that skill because they get married to their past views, and I thought it was a brilliant skill.
Retail sales taking place on Friday morning. Before we get to all of that, looking ahead to retail sales and the economic data, let's set the scene. Donald Trump and Joe Biden in the same room later on this morning, box office.
Yes, I think many people would agree with you. It's going to be box office. There is going to be a pool spray at the top, so we'll all get to witness this greeting they're going to have in the Oval Office. These two men, as far as I am concerned, because what I've seen and reported on, they have not been in the same room since June. And that is when Joe Biden ended his political career in that disastrous debate performance. There is historical context for this. 8 years ago, Obama invited Donald Trump in to have this meeting, to carry on this tradition. 4 years later, Trump did not give that grace to Biden. Biden today is going to reestablish it.
We're all looking at the cabinet picks coming through. There was a flurry of them yesterday evening. We'll spend some time talking about that. Still waiting for the big two, state and Treasury.
Yeah, well, I think what actually is shocking to me is the fact that there's been this drip feed of the fact that the State Department might go to Senator Marco Rubio of Florida. Actually, a source told me yesterday the Trump camp is pushing to put Laura Trump, Donald Trump's daughter-in-law, into that seat. But yet Donald Trump last night had a flurry of statements, defense, CIA. Where is the Secretary of State pick then? And I think it's more interesting that he has yet to publish that.
We've got to look at the economic data at 8:30 Eastern Time and then think about the data in our future. And to do that, you've got to work out where the emphasis is for Donald Trump's second administration, what the policy mix will look like, and a sequencing of things as well for the next few years.
The market has already started to refocus on inflation. You could see that in the bond market action yesterday. The fear is that you have a Fed that has started to cut into not just growth, but into a potential 2025 where you have that just fueled by Trump's policies. The remarkable thing about that, John, though, is you have a bond market that's squarely focused on that and fearful of the economic data to come, and you have a stock market that remarkably has been able to shake it off.
All-time highs after all-time highs on the S&P 500. After that data drops at 8:30 Eastern Time, we'll catch up with the Minneapolis Fed President Neil Kashkari. Do not miss that conversation. Coming up this hour, we'll catch up with Drew Pettit of Citi as the post-election equity market rally runs out of steam. We'll speak to Jessica Taylor of the Cook Political Report on Trump's Department of Government Efficiency, and Jane Foley of Rabobank as the dollar rally gains momentum. We begin this hour counting down to CPI at 8:30 Eastern Time. Stocks snapping a 5-day winning streak, with traders concerned Donald Trump's policies may stoke inflation. Drew Pettit of Citi writing, markets were already in euphoria pre-election. Sentiment has run further post-election. Investors should tactically fade a post-election rally should the S&P 500 exceed our 6,100 year-end bull case target. Drew joins us now for more. Drew, welcome to the program.
Well, thanks for having me this morning.
The bullishness is overwhelming. This was Citi. The bias is still to the upside. Mike Wilson, Morgan Stanley, further follow through to the upside and cyclical parts of the market. Edgy Ardeni, investors are thrilled by regime change. 6,100 for 2025, 7K for 2026. We're looking at 8K. So 7K next year, 8K the year after. Are we getting a little bit ahead of ourselves here?
I literally have to laugh because of all the headlines, because I feel like it might just be easier for the media to get all the strategists in a room and let's just have an auction. Do I hear 7,000? Do I hear 7,500, 8,000? Here we go. Look, I understand a lot of the calls into year end. People are going to highlight seasonality. They're going to highlight sentiment being really strong. I get that a lot of this news around deregulation and tax cuts is kind of feeding the sentiment and euphoria beast. But we have to remember, normally you get a little bit of a sell-off into elections and then that post-election rebound. We really didn't get that this time. So the setup was very strong coming in. So it's like sentiment, the news flow, it was already very, very strong. At some point, you think there's got to be a breather.
Do you need a catalyst to turn that story around, to stop this train?
Yes, and I think what you guys were talking about to really kick this show off, rates might have been it for the last couple of days. You know, bond market closed Monday, then you have, you know, double-digit basis point move, and you see the market come back. And we're watching this in our fair value model because that's been declining as rates have been rising. So I think rates could be something near term to consider.
You say markets came back, but I mean, the S&P fell by 1/3%. That's hardly some sort of big drop. Do you see that change in sentiment already starting? Have bond yields gone far enough, you think, to kick that off?
No, it's funny. We're not seeing it in sentiment, but we are seeing people profit take. It's funny as we're, you know, again, it always feels good for your career to kind of put like a number out there, right? Like we're trying to, you know, say the market's going to cap at this certain level. But really what we're trying to say is, fundamentally, we still like the market. There's not a catalyst to completely blow up a bull market here. Earnings were really good. We didn't really get a ton of follow through in guidance, but we said that going into the quarter, you shouldn't really expect that with an election kind of in the way. But we've run pretty far, pretty fast. A little bit of back and fill here gives you a little bit of upside into year end, and then you can sit there and really assess what you think 2025 has in store.
Are the fundamentals still okay for small caps, though, which have been the darling of the post-election trade, when you have a quarter of the companies in the Russell 2000 unable to even earn enough money to pay down their interest payments, especially as bond yields are going higher? Are fundamentals okay there?
They're getting better. So a little bit about markets is not how good are things, but like the incremental move from here. We're glass half full on small cap, but compared to a lot of other strategists that have been kind of pounding the table, hey, valuations are great, earnings growth like looks really good, and you're kind of sitting there going, no. When I look at companies where you actually care about earnings, that earnings growth for next year is still going to come in below the S&P 500. And yes, you do have rate headwinds. And on top of that, when we look at all of the economic data, we're not in this soft landing, like all these different camps, because everyone can argue either side. We're in this like no cycle environment. And for small cap to really structurally outperform at an index level, we think you need lower rates and early cycle. We like stock picking down there. We think that's a really nice alternative to the other 493, but I don't think you could ignore mega cap.
Drew, you said there needs to be a catalyst for some pullback. Is the catalyst potentially going to be in January or February when we might get tariffs?
Yes, because when we looked at the price action post-election, we think a lot of that really did price in lower taxes and deregulation.
The good stuff.
Exactly. And again, when you have a euphoric market, when you have a bull market, again, that's feeding the beast, right? What's getting a little bit messy is trying to figure out tariff impacts. And this isn't like a surprise, because we were talking about this in February, probably one of the first times I came on your show. And the issue was really isolating the effect. And then you have the dollar moves on top of it, which makes it even messier. And then you have companies that can ask, they can basically ask to have tariffs waived. And we saw that in the first administration too. So impacts a little bit hard to tell. So the market's kind of brushing that off until we get a little bit more policy clarity on that front.
The market is brushing off the bad stuff, but when it comes to the good stuff, Donald Trump is going to have one of the slimmest majorities in the House of Representatives in history, much tighter than he had in 2017. So what gives the market all this impetus and excitement that actually they think those tax cuts are actually going to get it across the finish line?
Well, it's funny. You just have to extend the tax cuts that were already given, and then you listen to Kamala on the campaign trail, and you sit there and go, well, no one really wants to raise taxes as a politician, right? So you have a little bit more confidence that's going to come through. Deregulation, again, probably more of an executive order thing, so you can see how that can get priced in early too. And it's just, again, it's the question mark around tariffs. Can they do broad in a slim majority? Okay, that sows a little doubt on that kind of negative catalyst. And if it's targeted, can markets shake that off?
So what do you like right now? Because a lot has moved. Small caps are up by 9% or something like that last week. I think banks are up by 10% in 5 sessions. Regionals up by more, almost 13. We've seen some big moves. What are you advocating for into year end and beyond?
Still like the cyclicals. We're talking about this big move post-election, but that's on the heels of 2 years of relatively no move. And honestly, something like banks, they were moving on a good fundamental story, and a positive sloping yield curve before we even got this like Trump kicker. Small caps like stock picking down there because if you think housing's undersupplied, housing, you can go down and find a ton of housing stories in small cap. Capital markets names as well. They're doing really well. Asset managers, a lot of that is down cap. And then, you know, it's funny, thematically, everyone wants to talk about kind of the sexy tech trades and stuff that's out there, but infrastructure. It's been a theme we've been on all year. It's just, what are we going to build? And honestly, we still need roads and bridges, and I think that's going to have some tailwinds too.
Drew, it's good to see you. Appreciate your time, sir. Drew Pettit, Dev City, trying to work out where to be in this market that is absolutely ripped in the last week or so. Equity futures on the S&P 500, just a little bit softer here, with an update on stories elsewhere. With your Bloomberg Brief, here's Yahara Hackers. Hey, Yahara.
Hi, John. Welcome back. President-elect Donald Trump tapped Elon Musk and Vivek Ramaswamy to lead a new Department of Government Efficiency. The acronym DOGE, of course, referring to Musk's favorite cryptocurrency, Dogecoin. Trump announced the new department will slash excess regulations, cut wasteful spending, and restructure federal agencies. The president-elect said they will complete their work no later than July 4th, 2026. And here's the latest on the president-elect's cabinet. Trump has tapped John Ratcliffe to be the director of the CIA. Ratcliffe previously worked as the National Intelligence Director at the end of Trump's first term and served as a Republican congressman from Texas. Trump also nominated Pete Hegseth as Defense Secretary. Hegseth is a Fox News host and an Army National Guard officer. Both nominations need to be confirmed by the Senate. And 7 & I Holdings, a Japanese owner of the chain 7-Eleven, is set to be considering a management buyout to take itself private. That's according to Bloomberg sources. They say the transaction could be worth $58 billion, which would be the biggest buyout ever in Japan. Any deal could be presented as an option for shareholders in case Alimentation Couche-Tard, the Canadian company behind Circle K, becomes more aggressive in buying 7 & I. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in about 30 minutes' time. Up next on the program, the Department of Government Efficiency.
I will create a government efficiency commission tasked with conducting a complete financial and performance audit of the entire federal government. Elon, because he's not very busy, has agreed to head that task force.
That conversation up next, live from New York City this morning. Good morning.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Always on the heartbeat of the tech spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
live from New York City. Welcome to the program. Here's a snapshot of financial markets. Equity futures on the S&P 500 just a little bit softer. We're down 0.2%. I mentioned that note from Ed Yardeni of Yardeni Research. Let's go through those numbers again. Stock investors thrilled by regime change to a more pro-business administration. 2024, 6,100, 25, 7K, 2026, 8K. They're the price targets on the S&P 500. We'll come back to them a little bit later. Under surveillance this morning, the Department of Government Efficiency.
Let me tell you, we have a new star. A star is born, Elon. I will create a government efficiency commission tasked with conducting a complete financial and performance audit of the entire federal government. Elon, because he's not very busy, has agreed to head that task force. Elon will always come through. We know that.
So here's the latest this morning. President-elect Donald Trump picking Elon Musk and Vivek Ramaswamy to lead a new Department of Government Efficiency, looking to slash excessive bureaucracy and wasteful government spending. Trump saying the new department operating outside of the government will undertake a, quote, complete financial and performance audit of the federal government. Joining us now is Jessica Taylor of the Cook Political Report. Now, Jessica, welcome to the program. I know that it has department in the title, but if you take that out, how much authority does this actually have? And if you're a senator right now looking at what's happening in this Department of Government Efficiency, what are you thinking?
Yeah, I mean, Congress would have to create this new department, and it's unclear if Trump thinks this is going to be cabinet level. Again, that would require more steps and different things, and more bureaucracy, ironically, and different things. So it certainly seems like this is an advisory commission and that they can advise Trump on things to do, but exactly, are they going to get a salary? There's, again, these are questions that are yet unknown, but clearly it shows the influence that Elon Musk has had on his campaign and will have in the new administration as well.
So this sounds like some sort of task force and an advisory panel. It has no actual power to execute on anything. It'll be working with the Office of Management and Budget, basically to give a recommendation. On the campaign trail, though, when Vivek Ramaswamy was running, he talked about getting rid of things like the Department of Education. Obviously, that would need to go through Congress. Is there any appetite in Congress to get rid of big institutions like that?
Given that it looks like there will be a very small House majority and a very, again, a slim 53-47 Senate majority, I think it's going to require bigger steps to do that. And so I think that slashing these big things and doing away with a lot of the federal workforce, which would, again, if we're talking about they would uncreate jobs, that would create more layoffs and different things. I think it's going to meet a lot of pushback, especially here within DC. I think that those things make for good campaign trail talking points, but actually putting them into practice is something very different.
You mentioned Congress and the slim majorities, mostly the very slim majority. We're not even sure exactly how slim it's going to be in the House. But in the Senate today, there's going to be this very important vote. The first time Republicans have actually voted for a new leader in 18 years because Mitch McConnell had such a hold on that power. Can you explain to us a little bit of who you think is going to come out on top when it comes to John Cornyn, John Thune, and Rick Scott?
I think that John Thune, the South Dakota senator, probably still has the edge, but whether he can get it on the first ballot is something I'm watching. If it goes to a second ballot with him and Texas Senator John Cornyn, that could make some interesting things. I mean, these two, are the Johns in a way, are the most in the mold of McConnell, would not shake things up. Rick Scott is the sort of dark horse candidate, and of course, he's been getting a lot of support on social media from conservatives like Elon Musk and different things, and there's been people calling the Senate offices, urging people to support him. But he has a couple of things working against him. First of all, this is a secret ballot, and senators hold these decisions closer to the vest. I think they're going to vote for the Senate. Ultimately, they're institutionalists, and I think shaking the Senate up in this way is going to be hard. And he's a very divisive, Rick Scott is a very divisive figure within the Senate. Remember that he chaired the National Republican Senatorial Committee in 2022, and his tenure was very maligned by many within the Republican Party, that they felt like he actually lost a seat, if you remember that cycle. Mm-hmm. And he did not intervene in primaries in the way that Steve Daines, the current NRSC chair, has, that did deliver them the majority. So there were weak candidates like Herschel Walker in Georgia, Dr. Oz in Pennsylvania, that got through, and there were questions about the fundraising and spending. And so I think those things are all that things that are working against him. But again, I think that Thune probably has the edge, but we don't have an official whip count because again, these things are being held close to the vest. But I think it's probably either Thune or Cornyn in that regard.
President-elect Trump actually shared the betting markets showing that Rick Scott was starting to do well. And a lot of this has to do with that social media momentum, especially from the MAGA movement on him. But do you see this as a litmus test for Trump's control on the Senate?
Well, I mean, just the fact that Trump has sort of put out some of this, things that he wants, like recess appointments, and that you have all three of the candidates that have said that they would back this, I think just shows the influence that he has. And I think it's probably the reason that Trump hasn't got involved in this officially, because he doesn't he doesn't like to be seen backing losers and different things. And I think that would be the concern if he backed Rick Scott and he ended up not winning. I think that's, again, but could we still see an 11th hour decision for him to to come in and do this? I think, again, the meeting's at 9:30, so we could see. But again, I think just the fact that these senators, these Senate leaders are sort of bending to what Trump wants does show the influence he has within the Republican Party.
Well, you make a good point, Jessica, that in these early days, one of the most important things needed for speed is that of approval of his cabinet. We've had a flurry of announcements, most recently Department of Defense, the CIA head. Jessica, do you assume that what we've heard so far will have an easy time through an approval process or even recess appointments?
I mean, I think that some of them, he hasn't officially nominated Marco Rubio for Secretary of State. I think that's one that would get overwhelming support, of course. I think some of the other decisions, probably, Kristi Noem at DHS. But, the one, of course, that's making the most news that just happened last night was, Pete Hegseth, the Fox News host for Department of Defense. And I think that's sort of more of a surprising one. And, I think even some senators were asked last night about him and they didn't know a lot about him. So that's one that we could see, again, I think this is what the confirmation process is for, to vet and to dig into these nominees. But certainly he, of the nominees so far, has been the most surprising and is someone I could see raising eyebrows and could, again, we don't know what's going to happen yet, and this just came out last night. I think he probably would face the most difficult confirmation process. But again, if Republicans just go with what Trump wants, he may not, even though he is certainly an unconventional choice to lead the Pentagon.
Well, Jessica, we've learned over the past few years, and indeed during Trump's first administration, that just because you have a majority doesn't mean you have control. Are Republicans this time around on Capitol Hill more or less beholden to Trump?
I think they are probably more beholden because, listen, he has more of his allies in the Senate. There are people that they're just more afraid to cross him for what would happen in a primary and different things. But you do still have some more of those institutionalists. And again, I think Thune and Cornyn would fall into that. McConnell, even though he's not going to be leader, he's still going to be in the Senate. But again, you have sort of, more sort of outside the box people that have come in. Bernie Moreno in the Senate. Taking, the Ohio seat there, flipping it. You have people like Mike Lee, Rick Scott, Ted Cruz that are going to just be very loyal allies. You don't have the, John McCain's in there anymore. And that, even people that would have been one time sort of questioners like Lindsey Graham have completely remade themselves in Trump's image.
Jessica Taylor, appreciate your insight this morning. Thank you. Jessica Taylor there of the Cook Political Report. A flurry of picks yesterday evening, some raising eyebrows. Unconventional, possibly. What's wrong with TV presenters going into government? We could talk about that another time. Unconventional maybe, but combat experience, operational on the ground experience, Ivy League education. Let's put that to one side because that's all a pretty strong foundation. Management experience. This is a huge department.
More than $800 billion is the defense budget. It is massive. It is one of the biggest institutions, not just in the United States, in the world. And I think that's where the criticism is actually going to come. No one's going to want to criticize his tours in Iraq or Afghanistan, Guantanamo Bay, Cuba, but it's going to be, can this individual really steer an institution that big? And one criticism I heard was the fact that the optics of it. There's a Wall Street Journal report yesterday that Trump wants to make it easier to retire or fire some generals. Well, he does that while putting someone who currently is a Fox News host at the head of the department, potentially is optically doesn't look good, and also waters down this person's view of some of the strong picks they like Congressman Waltz.
Well, also part of the issue with this is with a lot of these picks that Trump has had, and even the Department of Government Efficiency, it's been about that. It's been about efficiency. How do you have someone come in without department experience and do that to a behemoth like the Pentagon, which, by the way, has failed basically every single audit it's ever had because it is such a beast? If that is your focus, I'm not sure how you get that done with anyone, let alone someone who doesn't have that type of experience.
Don't you think we're being trolled, Doge, Department of Government? Come on.
It's not a department, it's a task force.
Exactly.
It's a task force, or maybe a council.
Key line in the statement, provide advice and guidance from outside of the government. That's the key line in the statement released overnight.
The other criticism of this, of course, is going to be that Elon Musk might have an outsized say on Donald Trump, but doesn't have to divest in terms of his business interests. So can he say to him, you know, you should really deregulate this, or can we move along in autonomous driving, something that can help his businesses, but actually does not have to divest his business interests. But again, this is not a department. This is not an institution. One source told me last night, this is for Vivek and Elon, like cats to go chase around a ball of string. That's what they are equating this
Never mind them chasing string. The press are going to be chasing squirrels for the next 6 months. They're going to go nuts with this. Elon's going to come out and suggest cutting something on Twitter, doing a poll on X. Then the press will go crazy about it. The next 18 months, it's going to be messy. Coming up, Jane Foley of Rabobank as the dollar continues to rally. That conversation just around the corner. From New York City, this is Bloomberg.
Is the Vivian Tom clientele?
Yeah, power women, like the dragon women. They're lawyers, they're CEOs, they're all important decision makers, women in the world.
Why do you position your products for this group of women?
When I started, designing, I always want to do something that is empower women.
When you take a look at your store, there is something for everyone. Take a look at the T-shirt, for example.
My customer growing, like 30 years already, so they become more powerful. I also want to grow my Gen Z audience too, They are like in the 20s, so it's a more affordable price for them. And then, my powerful women's daughter wearing their mom's dresses, and they feel that the power, the energy. So now they come back to the store and they buy more.
It's the countdown to the market open as we bring you the first trades across Europe. We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta. And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Equities just a little bit softer. We're down 0.2 on the S&P. Similar move on the Nasdaq 100. Snapped a 5-day winning streak on the S&P 500 in yesterday's session. The moves we've seen, though, over 5 days on the banks, up 10%. On the regionals, up by almost 13. The post-election rally has been absolutely stunning. In the bond market, yields near July highs across the curve, the 2-year and 10-year. Making a move this morning, just a little bit lower on 10s, 441.97, but back in the 440s in the last 24 hours. On 2s, back in the 430s. CPI data dropping in about 2 hours' time. Then on to Friday when we get US retail sales. We've all got the same question. What would it take, Danny, to disrupt the easing bias at the Federal Reserve?
We've already started to see a market that's considering that. We now have somewhere around 50% odds that they cut in December. Neil Kashkari gave a hint of what that might be. He said it would have to be a surprise on the inflation front. I think, if anything, that helped fuel the bond market sell-off because it meant inflation still matters. It always mattered, but maybe we forgot about it in sort of the election euphoria, but a rate cut schedule still isn't guaranteed.
So we set this up with that in mind. At 8:30 Eastern Time, when CPI drops, 10 minutes later, Neil Kashkari of the Minneapolis Fed with his view on what it means for the outlook for monetary policy. Let's turn to foreign exchange. With yields up, the dollar a whole lot stronger, particularly against the Japanese yen. Dollar yen earlier on in the session taking out 155, 154.98 on dollar yen right now, up by 0.2%. That is a weaker Japanese yen, and the euro just about holding on to 106 now, 106.12. Euro dollar down 0.1%. They're looking for 101 over at Mizuho in the next several months going into Q1 2025. So we're on parity watch all over again on euro dollar at 106.11. Under surveillance this morning, President-elect Donald Trump heading to the White House to meet with President Biden today at 11 a.m. Eastern Time. The visit setting in motion the transition of power that will be completed in January. Trump also meeting with House Republicans as his party nears a trifecta in Washington. So 2 events here. So let's start with the first one. Trump and Biden in the same room.
That's going to be pretty incredible to watch. You see President Biden really wanting to make sure that this tradition continues. He immediately invited President-elect Trump into the Oval Office, the same Oval Office that Trump once occupied, that same Resolute desk that Trump once sat behind. This was something that Trump did not offer Biden. And there wasn't that peaceful transfer of the baton, if you will, that Oval Office meeting that President Obama gave to President Trump. So this is going to be very interesting. It's going to be a lot of style, not substance. Everyone is going to want to know, how do these 2 individuals react? They have not been in the same room since Biden's disastrous debate performance in June when he was still the nominee for president.
I also find it interesting where he's going on Capitol Hill. The fact that he's going to be meeting with the House, and it's not so clear he's going to the Senate because they have the vote for the majority leader today at 9:30 a.m. And that's going to be so crucial for Trump of who he gets and how willing they will be to pass things like his cabinet, for example. He obviously, his allies want Rick Scott, but maybe he's not stopping there because he sees Rick Scott or any of the Johns willing to pass through his appointees.
Side story worth watching, the president's son. Is there going to be a conversation about pardoning Hunter Biden?
Potentially today. That will not be, if there is a conversation on this, it will not be part of the pool feed when they go into the beginning of it and have these pleasantries. But Biden can also do that himself before the year is up. That is something that I actually think Trump would look kindly on because he has talked about how much he loves family and family ties, and you know, you go to the mattresses for your family.
One to watch over the next few months. Donald Trump's cabinet also coming together. The president-elect picking his former National Intelligence Director, John Ratcliffe, to lead the CIA and nominating Fox News host Pete Hegseth as his defense secretary.
So this got a lot of eye rolls in Washington. Some people even saying, who is this individual? I think we need do a little bit of a historical analysis and history lesson. There is a law that the Pentagon needs to have at least 7 years distance between themselves and the military service individual who runs it. Joe Biden got a waiver for Lloyd Austin Donald Trump got a waiver for General Mattis. There is also supposed to be this continuation tradition that we have not seen in recent history, except for maybe a Mark Esper, where the top of the Pentagon is supposed to be a civilian. So this individual, even though he's a Fox News host now, his prior background checks all of these boxes. And I was also reminded yesterday by Terry Haynes that Eisenhower's DOD head was the former CEO of General Motors, Engine Charlie. So you have to take this into historical context. But you nailed it, Jonathan, earlier when you said it's the managerial experience. This is a beast of an institution.
Boris Johnson was a journalist, became the Prime Minister. It's happened before. We've seen this all around the world. The Wall Street Journal reporting Spirit Airlines is preparing to file for bankruptcy protection. The budget air carrier in advanced discussions with bondholders to hammer out a plan after merger talks with Frontier broke down. Their stock is down by 65%. The hope is that we won't have to deal with this mess all over again, because the hope is that if two companies come together, they need to make a deal, and one without said deal goes bankrupt. The hope is that we don't do this again because we're going to have a change of administration. It will be easier to make deals.
Right. They tried to do a JetBlue deal in 2022 after backing down from a Frontier Air one. If they had done this in 2025, would it have looked different? I think the broad consensus is that it would. But in the meantime, I mean, you have to market the rise and fall of this company. I mean, it changed airlines today in the U.S., how we know them. Spirit is basically why we have to pay for extra baggage and why we have to pay for seat assignments. And now it's becoming, I guess, sort of a relic of that era, and something, again, probably wouldn't have happened in years to come.
Personnel's policy. Still waiting to see who he puts in some of these places like the FTC. Yesterday, Jane Fraser of Citi, the CEO, sitting down with Sonali Basak saying, game on. Our clients are waiting on the sidelines. There's been pent-up demand, and she thinks there's going to be a lot of M&A.
We'll play you some of that interview a little bit later this morning. That's about 10, 15 minutes away. That's one of the big reasons the financials have absolutely ripped over the last 5 or 6 sessions. Let's turn to foreign exchange. The US dollar hitting a 2-year high on the heels of Trump's election win. Jane Foley of Rabobank writing, it is our view that broad-based dollar strength will last into 2025. The Fed's interest rate cycle will come to a halt earlier and a higher level due to Trump's policies. Jane joins us now for more. Jane, welcome to the program. Not everything, of course, on the campaign trail will become reality. It's clear to me, though, you're making some underlying assumptions. Could you share them with us this morning? What are they?
Well, we are, and particularly with respect to the Trump tariffs. Now, of course, we don't know. No one knows how much of those tariffs will be pushed through on China or elsewhere. But we are assuming that if some of those tariffs will get pushed through, that will be inflationary. The U.S. economy, as it stands right now, it is still relatively robust. And so we think that, we might see the Fed cutting interest rates again in December and in January. But after that, we're skeptical as to whether or not the Fed is going to be able to carry on cutting interest rates. And that, of course, is a dollar positive story.
Jen, your world is a relative story, a relative game. It's relative to what is otherwise on the other side of the trade. So let's talk about the other side of the trade. When you say things like tariffs are inflationary potentially, are they disinflationary for the Europeans?
You know, I think the story for the Europe is far more difficult to understand. Now clearly, if Trump hikes tariffs for goods coming into the US, well, that's a tax on consumers. But in Europe, well, is there going to be tit for tat? I assume there will be some tit for tat. How much is that tit for tat going to be? Will, for instance, Chinese goods get dumped in Europe? So there could be an inflationary impact on tit for tat tariffs, but a disinflationary impact if China has a lot of extra goods that they want to sell cheaply into Europe. So it's quite difficult to understand, quite difficult to really draw, straightforward conclusions at this point in time. And that's something we're going to have to wait and see.
Jane, when the ECB began its cutting cycle, the discussion at the time was how far and how fast can they really go if America isn't going at the same time? You described a situation where the U.S. is going to have to pull off the brakes on cuts again. Are we going to have a similar conversation about the ECB, that their cutting cycle might too be stopped short for fear of what happens to the euro?
Well, I don't think the euro is a big concern for the ECB right now. And certainly if we look at a trade-weighted basis, the euro is not particularly weak. But also we've got to bear in mind that Europe, the economy in Europe, certainly if you look at Germany, is much weaker than in the US. And, I would imagine that if you were to ask any of the, big German exporters that you occasionally speak to on Bloomberg, would they like a weaker euro dollar? I imagine many of them would say yes, because look at the structural problems that have been thrown at some of these big German companies in recent years. The issues with China, weak demand in China, and at the same time, China becoming more of a competitor in some markets. The issue, for instance, with energy prices, and many German companies, looking elsewhere also for looser labour markets too. So there's so many problems that these big German exporters are trying to adjust to, and I think a weaker euro would actually help them.
So maybe the ECB doesn't mind that, but Jane, elsewhere, especially in emerging markets, the PBOC has already pushed back against a fastly depreciating yuan rather. South Korea has warned on volatility. Are we about to enter a new era of intervention from emerging markets?
It's certainly something that we've got to watch. Now, clearly, the stronger dollar does have, significant ripples if it's sustained across the world. For Japan, I think the Bank of Japan is certainly going to be one to watch. We, of course, have that huge amount of volatility over the summer. I think the Bank of Japan has learned lessons. They do have a new phrase now. They do say that a weaker currency can create more inflation. And I think that is a warning to markets that they are watching that they know they need to be slightly hawkish in their commentary to prevent the yen from weakening.
Well, Jane, we're already at 150. We're already at 155 on dollar yen. What's it going to take for the finance ministry in Tokyo to intervene?
I wouldn't be surprised if the Ministry of Finance did start to come in really quite soon with some verbal remarks to try and keep the market on edge. I mean, nobody wants to see the amount of volatility that we saw in the market again in the summer, but certainly I think they will be wary. We've got to bear in mind, that the cost of living crisis in Japan, which was partly caused by the weakness of the exchange rate this year, was in part one of the reasons why the Prime Minister earlier this year had to resign. That was one of the reasons. Of course, there were lots of scandals as well, but the cost of living crisis didn't help him. So this has really quite significant ramifications in the weakness of the yen through Japanese society. And I think the Ministry of Finance could start some verbal intervention really quite soon.
Taking a step back, as we hear more about how President-elect Trump is going to govern and who he's going to surround himself with, we know the policies mean a stronger dollar, but he has talked about in the past wanting a weaker dollar. How do you square those two?
Well, that is or can be confusing. Certainly during his first administration, he talked about a weaker dollar, and that, of course, was to try and sell more American goods out overseas, to try and fix that huge U.S. Goods trade imbalance. I think more recently, he's talked about tariffs being the most beautiful word, and maybe instead he sees tariffs as doing the work that maybe a weaker dollar could, because he also talked about wanting to keep the dollar as the global reserves system currency. And if that's the case, well, that sort of hints that maybe, a stronger dollar is something that he sees value in as well. So it is quite confusing. It is difficult to square that circle. But I think for now, if it's going to be tariffs, and that's going to be his favorite tool to try and sort out the trade imbalance, I think we can just assume that might mean a stronger dollar is okay within reason.
Jane, as you know, this has become and quickly become a very consensus trade. I mentioned Mizuho a little bit earlier, looking for 103 on euro dollar towards year end, looking for 101 through Q1. Jane, I want to understand the risk factors associated with the long dollar call. Typically, when you get worried about deficit spending, you sell the currency. We see that a lot in emerging markets. We've seen it as well in the past as well, the recent past with the UK, for instance. Is there any reason to fear that might happen in the United States?
I think it's a bit unfair, I think, to compare the UK with the US. The dollar is very different. So, yes, you can make comparisons, say, they both have big current account deficits, they both have big budget deficits, but the dollar has its own fundamentals. Around about 50% of the world's trade is still invoiced in US dollars. That is why, essentially, it is the reserve currency, and that is essentially why it is a safe haven. And what happens is that when there is any sort of crisis, even if it's one triggered by the US Treasury itself, well, there is a demand for dollars. People think, I need my dollars to pay my invoices. I need my dollars to cover my dollar-denominated debt if I'm in emerging markets. So there is this underlying safe haven demand for dollars that is sparked. That doesn't happen in the UK. That doesn't happen in any other country. And therefore, the dollar has its sort of own independent fundamentals, if you like, which should afford it some degree of protection if there is some sort of crisis about budget spending.
As we often say around this table, the privilege of acting recklessly. Jane, appreciate it. As always, Jane Foley of Rabobank. Euro-dollar session low, 105 earlier, 105.94. Right now, 106.13. With an update on stories elsewhere with your Bloomberg brief, here's Yahara Hackers. Hey, Yahara.
Hi, John. Boeing delivered just 14 planes in the month of October. That's the fewest since November 2020, which of course was during the depths of the pandemic. But this time it was a strike by the company's largest union that crippled its operations. So far this year, through the end of October, Boeing has delivered 305 jets. Its rival Airbus has delivered 559. Meanwhile, tech earnings in China are off to a strong start after results from media giant Tencent. Profits surged 47% in the third quarter, surpassing estimates and driven by the release of popular mobile games. The performance may help shore up expectations that the company will stand out among disappointing trends from its rivals Alibaba and JD.com, which continue to grapple with weak consumer sentiment over in China. And Apple plans to announce a new smart home device. Sources tell Bloomberg the wall-mounted display can control appliances, handle video conferencing, and use AI to navigate apps. CEO Tim Cook has made the device a priority for the company after trailing behind Alphabet and Amazon in the smart home area. We're told the product may officially be announced in March and could be priced at as much as $1,000. That's your Bloomberg brief. John?
Yahara, thank you. More from Yahara in about 30 minutes. Up next on the program, Game On.
I see particularly in the States, which is the majority of the M&A activity at the moment, and is likely to be that way. It is game on.
It is game on. Citi up almost 11% in just 6 trading sessions. We'll talk about the banks up next.
Many global investors that aren't interested in China anymore, but there's a lot that are. And obviously the local investors have money in China and are doubling down on investing in China. Many of the Asian investors, and in fact a lot of the Middle East investors, the Americans are gone away. Therefore, there's an amazing opportunity to put capital to work and get returns which are excess what you would get in other places. Where there is lack of money, there is usually opportunity. So we continue to build out our business in China. It's just where the money's coming from is different. And so we're raising local money in China for investing and bringing those that choose to be there to invest in China. So it's just a different, where the money's coming from is just different.
Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
A tectonic shift emanating from Washington. It's really a tale of two cities in crypto.
Crypto shouldn't be partisan. The transactions.
Really a record-breaking moment. Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Few programming notes for you. US CPI drops at 8:30 Eastern Time, and then we'll hear from Neil Kashkari, the Minneapolis Fed president, immediately after that, so look out for that conversation. Then it's on to Friday, with US retail sales very much on deck. Equity futures on the S&P ahead of all of that, just slightly softer. We're down 0.25%. Bond yields just a little bit lower, down 2 basis points. The 10-year, 440.98. Under surveillance this morning, game on.
I see particularly in the States, which is the majority of the M&A activity at the moment, and is likely to be that way. It is game on. The clients are on the front foot in the States. As always with M&A, there's a difference between announced and completed, and that's where certainly our people are ready to help.
So here's the latest. Regional banks surging almost 13% following President-elect Donald Trump's victory. As Republicans inch closer to a red sweep, investors pricing in expectations for looser bank regulations and more merger approvals under the incoming administration. Herman Chen of Bloomberg Intelligence joins us now for more. Herman, good morning.
Good morning.
Banks have ripped. They're up like 10% in 5 sessions. Regionals up by almost 13. Dangerous question. What are we pricing in?
We're pricing in a better regulatory backdrop. Trump is expected to loosen some of the regulations, including on M&A. M&A has been really tepid over the past few years due to the fact that regulators under the Biden administration hasn't really approved deals, and it's taken longer to approve deals. That's created a lot of uncertainty for the M&A backdrop.
Who does that help more, the big players or the small ones?
It probably helps the small ones most, especially potential sellers, because they can now garner higher valuations. You mentioned the stock prices ripping. That's really helpful for multiples. And in the event of a sale, you could get a better price for a potential seller.
At the same time, though, part of the reason that M&A has been gummed up, along with regulation, has just been high rates. People are too afraid to let go of businesses because they don't think they'll get the price that they want.
Right.
How does the macro backdrop with a Trump presidency, potentially inflationary type policies, collide with the regulatory backdrop?
Yeah, that's a good question. For rates, that can really exacerbate some of the unrealized losses on the securities portfolio of banks. And if you recall, last year, that was the big question for SVB before it failed. With treasuries higher, the unrealized losses will have to be absorbed by the eventual buyer, so that can create some negotiation issues for the banks.
Do you think there's any fear on Wall Street that the more populist wing of the Republican Party might try to push through legislation like J.D. Vance did when he was in Congress, trying to claw back pay from SVB, trying to prevent the big from getting bigger?
Right. There are still a lot of unknowns with the Trump presidency that's upcoming. So those are questions that the banks will need to wade through. At this point, there's a lot of euphoria about the potential easing of the regulations.
And you think where we were a year ago when regional banks, there was all this concern potentially they were going to fail. The IMF, the Fitch, they've all come out and said there is a little bit of concern when it comes to the commercial real estate property that these regional banks have a hold of, and those loans. Is that coming up anywhere in these concerns? It doesn't look like in the stock prices.
Yeah, definitely. As you've seen since over the past several quarters, the banks have really stacked really strong credit quality quarter after quarter. And while you're seeing losses in the commercial real estate, particularly office commercial real estate, that is a very small portion of the overall portfolio of the regional banks, at least the larger ones that I cover.
So is it fair to say that that crisis is well past us?
I think there's still more to come, but it will be easily absorbed because the banks have built up the bad debt allowance for potential losses, and lower interest rates with the Fed cuts really helps with the sponsors managing the office portfolio.
And potential deregulation, part of a Trump administration would mean if one of those banks were to fail, who gobbles them up? Regionals become mixed in with regionals, or is it going to be a big player like a JP Morgan buying out one of those smaller?
Right. Really, the typical stance is that the regionals would buy, the larger regionals would buy failed regionals. But you've seen with JP Morgan's instance with First Republic, there were some surprises there. But typically, we would expect the regionals to get bigger.
Do those bigger players even want to make those kind of deals?
It really depends on the asset. So First Republic was really attractive because they have a strong wealth management franchise. But a typical smaller regional bank that is really cookie cutter, probably a JP Morgan or BofA wouldn't be interested.
I don't know if you can share some names with us, but have you got any takeout targets in mind, some companies you're focused on?
Yeah, takeout targets. A lot of the regionals love to expand in the Southeast. So banks that are in Texas and larger metros in the Southeast are ones that I think would be most attractive.
What is it about the Southeast? What's that about?
It's just demographics. Folks moving from the Northeast to the South. You've seen companies move to the Southeast. And so there's a lot of economic activity, and that's really attractive for the regionals that are in maybe slower growth Midwest areas.
It's a huge demographic story we discussed ahead of the election as well.
Massive when it comes to the individuals that are moving to Texas, the individuals that are moving to Florida. When it comes to Texas especially, it's why people actually thought maybe Senator Ted Cruz's seat was up for grabs, because over the last 4 years, there's been a massive inflow of people, especially from places like California.
Herman, it's good to see you.
Thank
Herman
you.
Chan of Bloomberg Intelligence on the financials. The moves, again, that we've seen have been phenomenal. For the banks, up by something like 10%. The regionals up by close to 13%. You spoke to Apollo in the last 24 hours. That stock's up something like 17% in 6 sessions.
They are doing so well, and it's interesting because Scott Kleinman of Apollo said M&A, sure, that's going to do well regardless. He's really excited about wealth prospects, that you're going to have Donald Trump come in and make a great time for wealthy individuals and wealthy investors, cut taxes, they'll have more money to spend, and maybe you'll have regulation around 401ks, allowing them to invest in private assets. So he's kind of looking at the whole picture and saying, hey, any angle of this looks good for us.
Is this wish casting, though? Again, we don't know how slim that majority in the House is going to be. Can they get through serious tax cuts? I'm talking about 15% of the corporate tax rate with conditions. Is that really going to be feasible when you might just have a 1-2 seat majority?
We started the conversation this morning with that story. I don't know what the sequencing looks like. Is it tariffs before taxes, taxes before tariffs? Is it a mix of both? I don't know where the emphasis will be for the president. What's he going to shout about every single morning on his X account? And I still don't really know what on the campaign trail gets translated into legislative reality. And we've all got to deal with that right now.
And he's got 2 years because it's a midterm election in 2026. And what happens to the Senate? Does it flip back to Democrats?
They're going to be in a rush, which is why you should expect another flurry of appointments pretty soon. Coming up next on the program, Seema Shah of Principal Asset Management, Tobin Marcus of Wolfe Research. We'll speak to Earl Davis of BMO and Robert Fishman of Moffett-Nathanson. From New York City, with futures just a little bit softer, CPI is just around the corner.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
What would you say somebody young who's watching this should do if he or she aspires to be like you?
There's one component of our industry that people need to focus on, and it's not technical, and that's communication skills. Focus on being a phenomenal communicator, invest in that. Think about it, we have to convince a company to sell to us. You just don't walk in and buy the stock or tell them, yeah, you're for sale, I'll pay you this price. That takes years of relationship and effort. Why would somebody sell you that billion-dollar software company growing at 20%? Just because? No way. People hang on to these great assets. And then how do you get on the same page with the executive team of that company, even if they're existing or new? It requires just amazing communication.
If you go to a cocktail party and somebody comes up to you and says, I have $100,000 I'd like to invest, what do you would recommend that person do with $100,000? What do you think is a good idea to do with $100,000 today?
Sometimes they do, and I give them the most boring answer ever, S&P 500.
Just buy an index.
Buy the index. You don't have to worry about the quarterly earnings of a company. Did something change? Did somebody change management? You don't have to make this your full-time job. Just buy the index and you're going to be okay.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
The sustainability of the euphoria in the equity market depends really on the policy set that gets unveiled.
The market is betting on deregulation, the market is betting on lower taxes, on animal spirits.
Markets seem to be very joyful right now. One would think the Trump administration would want to continue that type of environment.
It is possible that Trump just threatens and waits to see what he gets from people, and he doesn't actually put up the tariffs.
I think the bond market, as bond yields rise, that's been putting increasing pressure on the stock market.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
I've only been here 60 minutes and it feels like a long week. It's like the race to Thanksgiving.
Welcome back.
I know you all feel the same. Let's just sort of get there and get there quickly. Equity futures on the S&P 500, negative here by 0.25%. On the Nasdaq 100, we're down by close to a third. In the bond market, big move higher across the curve in yesterday's session. This equity market just hitting a bomb-shaped wall in the last 24 hours. Yields are down this morning by 2 basis points. The 10-year 440.59 on twos in the 430s, down not even a basis point this morning, 433.83. If you are just joining us, welcome to the program. Let's go through the next couple of days, including this morning, 90 minutes away, CPI in America. Then on to Friday, when we get US retail sales, and looking for some Fed speak in between, Danny.
It does seem like there's been a shift to refocus in on inflation. At least that's what we heard from Neil Kashkari, that a surprise on the inflation front is the thing that could make them rethink December. It's a market that seems like it's more likely to respond to a higher inflation print today than one of a lower one. Sure, you could see some sort of a relief rally, but given the incoming administration and fears of what inflation that might bring, the market is yet again refocused on inflation and on edge.
Mohamed Al-Arian called it after the September payrolls report, and he joined us right after, early October, saying inflation is not dead. Neil Kashkari starting to be concerned about, which is why it's going to be so fascinating to hear from him after the numbers drop. And also we get a drip feed on some of this personnel and what that might mean in terms of policy going forward. Wall Street Journal this morning say Robert Lighthizer is going to get this job of tariff czar. This is an individual who wants to put up the barriers, who wants to put up the walls.
For investors, there is a good